You have excess savings dissipating by the end of the year. You have student debt payments coming back. And so we think it's a consumer that looks a lot weaker by the end of this year.
We're in a world with higher inflation, and we've reset.
One conviction view that we have is this higher for longer narrative globally.
I'm still optimistic that the market is going to move higher by the end of the year into next year.
Ultimately, if you do go into a recession, bad news is bad news.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market slightly negative on the S&P 500 after closing yesterday more than 20% higher from the October low. TK, some people might say we're back in a bull market.
Back in a bull market, and it feels that way. I mean, you see a little bit of red on the screen and we get a bid come in. And you saw it in the opening montage there with Ed Yardeni at 4,600 and Anthony Dwyer over at Canaccord at 2,200. And the bottom line here is the debate is raging into this June weekend.
Big time. Q1 into Q2. Michael Hartnett of Bank of America saying this. We've gone from recession fear to Goldilocks greed. He's very keen to point out that when you strip out the big seven, where all the performance has been on the S&P 500, the S&P year-to-date, Lisa, is down 1%. That's the quote this morning from Michael Hartnett.
Does this mean that it's more fragile, or does this mean it's just beginning? You talk to 3 strategists, you get 6 opinions. There's a question here about whether this is a bull market, whether this feels like one, or was it doesn't at all. It's just basically 7 stocks that are pulling everything along. And here we're looking at, potential Goldilocks greed. Yesterday, we actually saw a broadening out with respect to the gains. Is that indicative of something that could potentially continue, or the end?
It's a Friday in June. Your first data point, John. The VIX is at 13.76. Why do we feel so miserable?
Kit Duke, SocGen, my favourite quote this morning. Have we all become ostriches with a short-term memory of 10 seconds and a tendency to head off in one direction or another at full speed for reasons we can't remember?
Can we celebrate?
Celebrate what?
It's all clear on the Manhattan front.
Less smoke.
It's
Can
just
you breathe
way
again?
less. Yeah, it's been sport. And, I'm in a 6th-floor walk-up. I really can't see off into the distance.
See the sky, TK.
But, you can, it's like better. In Philadelphia was worse. It's better. And there's firefighters at real risk here trying to get this fixed. And Rob Carolyn says the low's got to move off Nova Scotia. Hey, it's better.
It's better. Let's hope it continues.
It's a bull market view of Manhattan this morning.
That's the bull market view of the smoke.
We only have optimists on today, right?
I think so.
Okay, good.
Stuart Kaiser, Vicky Charter at Deutsche Bank a little bit later.
Yeah,
he thinks this
go.
S&P.
5,000.
He thinks this S&P can get
5,000.
4,500. 4,500, not 5,000. Let's get to the price action on the S&P 500. Equity futures just a little softer, negative here by 0.1%. Looking to close out the week maybe on a softer note, but yesterday closing out the session on a very big note, a bull market. For some people, Bramo, I know some people hate that term, 20% off the lows in October, but ultimately other people will call it what it is.
We're going to have to call it that because that's what everyone's calling it. And frankly, it highlights just how much of a rally we've gotten. Today, I'm not going to really try to spin this any other way. It is a very slow Friday heading into an incredibly busy week next week. Today, some of the things we're watching, ECB Vice President Luis de Guindos and Supervisory Board Chair Andrea Enria are speaking at different events. This comes ahead of next Thursday's ECB meeting. Very curious to see whether their tone is shifting after the Australian Central Bank and the Canadian Central Bank. 4:30 p.m., the Fed is releasing the H8. I watch that every week. It is a report outlining the assets and liabilities of commercial banks. The reason why I care, this is deposit flows. How much are people starting to accelerate this pace of deposits out into money market funds that are giving about 5.5% at this point? And tomorrow, French Open, tennis women's singles final in Paris, Belmont Stakes in New York, and Man City is taking on Inter Milan at the Champions League final.
This is the new Bramo, the sports report with Bramo.
There we go. Bramo's got into football this season. I have to say, looking forward to the final of the weekend. As for the French Open, a little bit later this morning, 8:45 Eastern Time. Bit of counter-programming here. I'm announcing for the other side. Alcaraz Djokovic. What a tennis game. What a tennis matchup. Taking place a little bit later this morning.
It's great. I mean, I just a quick story. I stumbled upon it when I was 15 years old, and that color of green is seared with me forever. There's that certain French Open Roland Garros
against the red clay.
Yeah, and it was just like I literally stumbled on it walking by. Oh my God, that's it, and it's still that they've kept it.
Roland Garros. Gets your attention. Beautiful thing. Thanks for the story,
You should
Tom.
see me with a tennis racket in
Beautiful.
my hand.
I bet. Just great.
People fall over.
Epic
the
court
laughter.
coverage.
Epic court coverage.
Stuart Kaiser with us, trying to keep it together. Head of US equity trading strategy over at Citi. Stuart, good morning.
Good morning.
Can we talk about the character of this rally off the lows in October? A lot of people might say it's just driven by 7 big tech stock names, the rest of the market dreadful. What's your analysis around the character of this rally?
Good morning. Look, it is obviously clearly generated by a pretty narrow group of stocks, but I think what you're seeing essentially is there's a scarcity of growth in the market, and the market is willing to pay a premium for that scarcity of growth. And there's a narrow group of stocks that offers that growth, and as a result, those are the stocks that have performed the best. So I think, it worries us a little bit less just for that reason. If you look at what's worked this year, it's companies that have positive EPS momentum, so companies that are revising higher. Tech clearly falls into that category, because of AI and various other drivers, and they've been rewarded for that. So I don't necessarily think it's irrational. I think, what Lisa mentioned earlier is what gets it to broaden out and turns this into something that is maybe a little more durable and sustainable to the upside. So that's the debate, I think.
You and David Bale and the Citigroup team across all the broad platform have been hugely, you got to be in the market. Ambrose Evans Pritchard today in The Telegraph writes a blistering from China to England essay on what he perceives as the coming disinflation. What does the U.S. stock market do if we get disinflation like Ed Hyman and David Rosenberg are talking about?
I think initially, the market responds positively to that. Coming into the year, you had 2 big tail risks out there. One was hard landing growth. That's clearly either not happening or has been pushed into the future. And the second was inflation getting sticky at a level that was uncomfortable for the Fed. So I think if you got some downward momentum in inflation, it lets the Fed back off, it lets interest rates come in a bit. And I think that also kind of releases money into the market. To Lisa's point, you're earning 5.5% in cash right now.
Lisa, it's almost a societal sigh of relief. If, depending on the level, Japan's at 4% inflation, they get to 2%. It's like a breath of fresh air.
If we get there, right? And that's, I think, one of the questions, especially on the way, as people don't really have an edge on this whole debate about whether we're going to get there or not. And there's been a lot of conflicting data about whether the economy is resilient or whether we're really seeing signs with yesterday's claims data that it is rolling over. What are you looking for to sort of give you conviction that this is the beginning of something more durable versus a head fake?
Look, I think it ultimately goes back to the labor market, most likely. The labor inflation is what the Fed is most focused on, so that's the key to that inflation tail risk. And it's the strength of the consumer that, would probably drive a recession. Our economists think if you do get a recession, it is more consumer-led. So I think you need to focus on labor market data and wages in particular. Look, if there's a scarcity of growth in the market, then how do you resolve that? You have more economic growth, which drives more earnings growth to a broader number of stocks and allows people to invest in a broader number of stocks. So I think ultimately this is opened up by the timing and sort of depth of a recession if you get it. And frankly, I think labor market data is the key to that at this point.
So given where we are, what are you doing? Are you fading this or are you leaning in?
Look, we've become a little uncomfortable with the tech trade. It's a thing we've been pretty bullish on all year. As I mentioned in the past, we just don't see any really compelling alternatives to that right now. So I think we're reluctantly, staying in the tech trade until we get some evidence of that growth improvement. I think if you look at what most institutional investors have done this year, coming into 2023, the view was you have a recession in the U.S. Some thought that was going to be in the first half of the year. So they're in this very conservative portfolio. And the question is, what gets them out of that? Is it price action? I think probably not. I think, price action may force faster money into the market. But, your long-only community is not going to allocate into cyclicals if they still have a recession out there in the visible time horizon. So I hate to say it, it all comes back to growth, in my opinion.
You're raising the right questions. I think you provided market analysis and we followed it up with a conversation about the economy. The market's not the economy right now. How do you divorce this broader conversation about economics, disinflation, the Federal Reserve away from what's happening at the top of this market and just accept that narrow leadership can be okay and maybe last longer than you think?
I think it just gets back to a scarcity premium, frankly. Look, there are investors that have to be invested in the market, right? And I think what the market investors are telling you this year is if I've got a recession potentially on the horizon, and I've got 5.5% cash yields, then there has to be a really good reason for me to own a stock, right? There has to be a very good single stock story, or there has to be an underlying sort of macro or structural trend. And what we've seen really is money go into 3 sectors this year. It's industrials, it's healthcare, and it's tech. Industrials, there's a number of well-known kind of medium-term themes, Inflation Reduction Act being one of them, and defense spend. Tech, you have AI. And healthcare, frankly, is large cap growth. So those are the 3 areas where people are saying those sectors clear the hurdle for me to put money into cash. And I think that's why we're seeing the breakdown of performance we are.
Where's your S&P target then? How do you readjust that? Help me with your Monday morning equity note here. Is there a tendency to adjust higher?
Look, Scott Kroner is our U.S. economist, U.S. equity strategist. He's at 4,000 for year end. He believes that's, fair value with a range of, call it 30.
It's fair value, but the market's not pricing fair value is a wide belief right now.
Yeah, and I think, look, there's obviously a confidence interval around that. And I think when you're at 4,200, you're at the top end of that sort of confidence interval band. And when you're at, call it 3,800, you're at the lower end of it. So I think what you're doing here is you're saying when you get to 4,200, your risk reward is fairly limited. And I think you have two choices to make. One is you go all in on the cyclicals rotation, or two is you find ways to stay in large cap growth, and maybe you do that by avoiding some of the largest stocks, like NASDAQ equal weight, for instance. You're still like a heavy tech exposure, but you're not trapped in 5 or 6 stocks. So, people are getting creative. Sometimes creativity, what do they say? Desperation breeds innovation. So, maybe that's
Is the desperation there? Are the people at 3,600? How desperate are they into this weekend?
I think there's pressure there. We're seeing pressure in tech. You can see that in the option space. Skew is inverted in a lot of stocks, i.e. the call is more expensive.
What about the
than
skew of institutional investors that have missed this October rally?
Yeah, I said you're seeing that in tech, and you're seeing that in S&P options as well. Zero-date options is a big theme in the market. For the first time since February, zero-date call options outnumber zero-date puts. So there's definitely pressure on the institutional community, particularly through the option space, because I think people are a little hesitant to put the full cash to work at this point.
Not just a huge deal, Tom. It's the deal.
Yeah. Better said. Better said.
Going into summer, you're trapped in cash. It paid you 5%. It looked good at the start of the year, and then you realize what you missed.
I defer to Mr. Kaiser, but my basic feeling is the middle of June feels like about October 15th in a normal year, and it's like, OMG, I'm this far behind. I don't own Apple, Nvidia, some of the, not the 7 stocks, but I don't own the top 20 stocks. I'm in trouble. What do you do? Buy calls.
I think that's right, too. And, a lot of people that actually got that trade right are now wondering, what do I do with my money now? Like, do I sit in this stuff and let it ride, or do I need to get out of that? And
come on.
You hedge the people sitting in cash.
You hedge the triple leverage all cash ETF. You hedge it.
Sell it to TK.
You pick up 17% gross yield after a 2.20 payout.
Hey, Stu, this was great. It's good to see you, mate. Stuart Kaiser of Citi. Coming up on this program, the former president charged over secret documents. We'll catch up with Terry Haynes of Pangea Policy, and an upgrade on Tesla from guess who? Dan Ives of Wedbush. New price target, 300. That conversation just around the corner.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. New Yorkers can breathe a little easier today. City environmental officials say the air quality improved overnight to moderate. Still, people sensitive to pollution are being advised to take precautions. New York's air quality index improved to 100 on a scale of 0 to 500 early today. The reading reached the most serious level of hazardous earlier in the week as smoke from the wildfires in Canada moved across the U.S. Northeast. Tesla shares are poised to rise for a record 11th consecutive session, matching the stock's longest winning streak set in January 2021. Now that after General Motors said it would adapt its electric vehicles to Tesla superchargers. It follows a similar move from Ford. Tesla shares have risen more than 90% so far this year. UBS has sealed an agreement with the Swiss government to cover $9.9 billion of losses it could incur from the rescue of Credit Suisse. Now, that clears a major hurdle to closing the historic takeover. The agreement covers about 3% of combined assets of the merged bank. Bank of Japan officials see little need to adjust its yield curve control program. Bloomberg has learned that a move is unlikely at next week's policy meeting, given improvement in the functioning of the bond market and the smooth shape of the yield curve. According to a Bloomberg survey, nearly all economists expect no major policy shift at that meeting. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
I'm an innocent man. I did nothing wrong. And we will fight this out just like we've been fighting for 7 years. It would be wonderful if we could devote our full time to making America great again. And that's exactly what we did. But now Again, our country is in decline. We're a failing nation, and this is what they do.
The former president on Truth Social, President Donald Trump there, indicted over his refusal to return classified documents found at his Florida home. This according to 3 people familiar with the matter. It's TK truly extraordinary.
It's extraordinary, and it's very opaque right now. I love what Lawfare blog did this morning, Scott Anderson and Ben Wittes. This being Lawfare and not cable news, we are going to wait until there's an actual indictment. That's what the adults will do. They will wait to see the actual indictment.
Yeah, my lead there, Tom, based on our reporting that according to 3 people familiar with the matter, this is happening. Yes. Most other people reporting the same thing. You can see based on how the president's responded to it in the last 24 hours or so. And TK, I think one thing to watch going into the race for 2024 is how the other Republican candidates in this field respond to it as well.
Oh, no question about it. But the heart of the matter is these are federal charges in Miami and of huge import. Again, Tuesday's the day, right, John?
According to reporting,
yeah. Some summoning is the phrase. What we're going to do is talk to somebody who has an immense respect for legal pros on this. Terry Haynes is founder of Pangea Policy with decades of duty on Capitol Hill. Terry, you know, I go to Lawfare like everybody else because these guys are the adults in the room, and they say wait for the document. What are we waiting for?
Well, we're waiting to see what the actual indictment says and what the charges actually are. You know, you and John are absolutely right. You know, there's a lot of, 3 sources say, and, the former president wasted no time not only in getting out there and talking about it, but one thing I found significant was the first fundraising email showed up at about a half an hour after he made that announcement. So, there's clearly an attempt by him not only to frame this thing before the indictment, whatever it is, comes out, as well as raise money and gin up his followers.
Terry, my experience here goes as far as Perry Mason, maybe Law and Order. So you're going to help us right now. To me, there's a massive distinguishing feature between state courts in New York or any other state for that matter, and a federal court anywhere, in this case in Miami. What is the state court versus federal court distinction for the former president?
Well, it's a couple of things. One is the sorts of offenses. I mean, there are things that are exclusively federal offenses, and you have in the Trump case, you have not only documents but kind of also investigations about January 6th matters. A lot of the state court matters have to do with things like his business and whether his business records were on the up and up, the tax evasion matter that they went through in Manhattan, those sorts of things, but also one of the cases, which is a Georgia case, possibly has to do with whether or not he interfered with Georgia state election law as a result of the January 6th matter, asking Georgia officials to find him votes, that sort of thing. So the matter really is kind of civil versus criminal, and it also has to do with the degree to which the former president can be punished, either by incarceration or fines or the like.
Terry, John picked up on the right point here, which is how do the other Republican potential candidates really step up and respond to this? Do they embrace the sort of deep state conspiracy, or do they say this just shows he's not fit to run?
The answer is, Lisa, is both. They have to attack Trump head on. I think you'll see an intensification of what I call the pack swarm mentality, where the pack of these candidates all talk about Trump's unfitness to run and how he's not the best person and why. And at the same time, they hedge their bets a little bit by raising concerns about the justice system. And there are questions, unresolved questions, about not only whether or not the potential indictment here is different treatment. I mean, remember, Trump's not the only person that's had took records home with him. That includes his vice president. That includes the sitting president, potentially others. But also, there's kind of a broader historical question about how these laws were enforced. And President Trump is trying to make a case that both there's different treatment here for him, as well as a situation where these laws were never enforced in the way that the Justice Department is proposing to enforce those laws. Those are both questions that the Justice Department is going to have to answer as this case moves forward.
Terry, you mentioned that the fundraising emails went out right after the announcement by the former president. Does this type of issue have the same resonance with voters that it used to?
Oh, I think it has resonance. You notice in the Trump statement, he's pushing the buttons about, they talked about the Russia hoax and that was wrong. They talked about this, that was wrong. That was wrong. Now he refers to this as the boxes hoax. So he's trying to gin that up. What I will say on the primary battle is that, forget about the national beauty contest. If you look at the early states, you've got Trump about 40% in the field, about 60%. And I think that what happens is that a lot of these candidates really kind of combine to take Trump down and at the same time appropriate the policies and say, hey, look, I'm your safer alternative.
Terry, it's so messy down in Washington, D.C., as you know. I just wonder how much pressure will build now on House Republicans to push up their investigations into the sitting president. How much pressure is going to be on them to do that now?
Oh, I think there's no pressure on them. I think they put pressure on themselves to do that, frankly. One thing I want to say here is that just because Trump, I think, is less likely to become president as a result of all this doesn't mean that Biden's more likely to become president. One reason for that is that those investigations, I think, intensify and ramp up. The other reason is, should an alternative to Trump emerge, and we're really not going to know that for 6 months or more. I mean, but if the Republican nominee isn't Trump, that person is better able and better capable of putting Biden on the back foot on policies as well as his health and his age. So this isn't unalloyed good news for Biden by any means.
Terry Haynes of Pangaea. Terry, always appreciate it, sir.
Brief, sir.
Thank you, sir. Just fantastic. A couple of headlines dropping in the last 10 minutes or so. I think you can file this firmly under the category that is things you never want to say as the CEO of a business. Sergio Ermotti of UBS this morning, of course, the former CEO, now the new CEO and current CEO of the business, overseeing the tie-up between UBS and Credit Suisse, securing that Swiss government guarantee of about $10 billion for losses if they incur them. Sergio Ermotti saying this morning that most of the staff at Credit Suisse are, quote, good people. He wouldn't comment on the job cuts, but Tom, I'd say for Sergio Ermotti, a little bit clumsy there with the language to say that most people at Credit Suisse are, quote, good people. Most people
Another endearing quote, the next few months will be bumpy. That's, quote, will be bumpy.
Yeah.
Well, what a mess. And again, it's a domestic story as well with the Swiss government involved. The $10 billion number waltzed by yesterday as some form of guarantee. I'm not up to speed on it, other than to say this has many different fronts besides the usual Bloomberg, Continental Europe, bank talk. There's a lot more going on here than that.
Way more, just to see how this drama plays out. It's more than good people. We know some of those good people over Credit Suisse.
Tom and John, they're good people. She said that.
We're good people?
We're good people, yeah.
Will you stand by that on a record?
Absolutely. Some of us are good people. No, kidding.
Some of us are good people.
I will just say, going forward.
This
yes, carry on.
The offspring, can we say that the offspring are good people?
Some of them are good people. I'm not sure if we can categorize all of them.
Alsa is a good person. She's going to join us shortly of RBC on foreign exchange. Looking forward to that conversation. I promised you that call on Tesla from Dan Ives of Wedbush. Musk and co are playing chess. The others are playing checkers. The price target goes to 300. 234 is where we trade at the moment on Tesla. The latest news, of course, is that Mary Barra of GM joining Ford and their announcement over the last month to use Tesla's EV charging network. And we're going to have an industry standard potentially here in the United States, Tom, and it's going to be driven by Elon Musk and Tesla.
It's needed. From what I don't know anything about this other than to say everyone I know that has an EV says this is a huge starting point deal.
This morning it feels like everyone wins. Tesla up by 4%, GM up by 3.5%. Live from New York City, this is Bloomberg. Let's get you to the weekend. Equity futures on the S&P 500, just a touch negative on the S&P, softer, lower. We're down by 0.1% there. On the benchmark in America, after closing back in a bull market, up by more than 20% from the October lows and heading towards a fourth week of gains. That's the longest weekly winning streak of the year so far, potentially, on the S&P 500. The Nasdaq actually down slightly on the week so far this week, up slightly this morning by 0.05%. The front end of the curve absolutely whipsawed in the last 48 hours or so. On the one side, by a surprise rate hike from the central bank in Canada, that pushed yields higher. Then yesterday, yields pushed lower by some disappointing jobless claims data. Disappointing is an important word because it depends who you're talking about here. Disappointing if you're on the wrong end of the labour market right now and claims are higher. Perhaps this is what the Fed wants to see, though, TK. RBC Blue Bay out this morning looking for a 25 basis point hike next week from the Federal Reserve. Due to inflation pressures. They're not alone. I'd say this is an out-of-consensus call, but they're not alone. Andrew Hollenhorst of Citi, another, who thinks they move next week.
And subject to adjustment, I believe it's Tuesday when we have a CPI report where everybody's going to adjust rapidly to the 24 hours ahead as well. I like the data check there, John, because it really captures the equity lift that essentially no one believes in. The negativity out there, the comfort in cash out there, granted with a big yield, is substantial. I think I can honestly say I've never seen so much doubt at 13.76 VIX, 4,300 SPX, getting on 34,000 Dow. NASDAQ's a moonshot. This is the strangest Friday in ages.
Hey, Tom, it's a tanker full of pessimism fueling this market, without a doubt. Just leaning against that. I just want to finish on the FX market and the euro. Guy Johnson and I were going back and forth on this yesterday. It's a really important conversation. In Europe, we've had the stagnation in the economy, and it didn't bring inflation lower in a pronounced way. That's really, really important when we're talking about the Federal Reserve and this idea about what is sufficiently restrictive. How much does this economy need to slow down before inflation starts to fall well towards target? And Guy making a point yesterday, and it's a good point, it's an important one, that in Europe you had no growth in 4Q, no growth in Q1, negative growth in both of those quarters, and inflation is still a problem.
Yeah, it is. And what's important here is the parsing of goods dynamics versus service dynamics. And the answer is there's some serious goods disinflation going on. And we're going to look at the litmus paper of the system right now within equities, bonds, currencies, and commodities. There's nothing deeper than the foreign exchange market. And, of course, it does link into politics. Elsa Lingos joins us now, Global Head of FX Strategy, RBC Capital Markets. Elsa, thank you so much for joining. It's just real simple. Can FX provide an indicator if and when inflation breaks? Can FX get out front and predict a disinflationary trend?
So FX is an interesting one because it feeds into it both ways. It's a forward-looking indicator, as you say, but then also it has an impact itself on inflation. And in some cases where you see a currency weakening a lot, that brings further inflation. Right now, I think what we're seeing is we've had the initial step down in headline inflation, base effects falling out. Yeah. But what's happening is core is remaining really sticky. And it's really unclear that the trend lower extends or whether we just kind of bottom out higher than central banks would like.
Which pair is my Friday thermometer to know when inflation and core inflation breaks? On a euro dollar, is there some dynamic there where we see euro dollar 112, or should I say 103, where that's a signal to you of disinflation finally?
What's really interesting is that it's a similar dynamic happening across many countries, but at slightly different times. So this week, it was all about the RBA in Australia first up, and then the Bank of Canada that you mentioned. And so we've seen markets rush to price in more hikes from both the Australians and the Canadians. And at the moment, the Federal Reserve is lagging. I wouldn't be surprised if we then get a catch-up move where markets kind of pivot away from the Australians, Canadians, more towards the US next week or the week after.
Also, what would be the reluctance to do that? How would they signal why they aren't raising rates in light of, especially if that CPI report is as hot as people expect, after Norway saw a record high in terms of CPI just earlier this morning?
I think it's very deeply ingrained into markets that the Fed doesn't like to surprise, and it's fair, right? It's how they've treated us in the past. If they wanted to signal something, they would use a leak ahead of a meeting. And so we're all saying, well, they can't hike because there's only 7 or 8 basis points in the curve for June. But you also have to ask the question, well, does it really matter if it's just a question of timing? If they don't hike in June, but they tell us they're almost certainly going to hike in July, short of something completely unexpected, a little bit like what the ECB did earlier this year. I mean, in many ways, that has the same impact, right? Because we're close to fully priced for a hike by July, but then it raises the prospect of further hikes later on in the year.
I just immediately went to this one reporter at the Wall Street Journal to see whether he'd written anything lately, and he hasn't. So to your point, as far as the leaks go, it seems like we haven't really gotten indicated on that front. The Fed has a really difficult one to kind of parse in terms of messaging right now, especially if they don't want to surprise the market. How difficult right now is the ECB's job on Thursday?
And I think the ECB is a little bit easier because they've done a fairly good job of kind of guiding markets to roughly where they feel terminal rates are going. The broader question is actually what you mentioned earlier, John mentioned earlier, that you've had a slowdown in activity and yet inflation still remains kind of uncomfortably high. It's definitely a lot easier than it was a few months ago because, again, you've got those base effects, you've got energy prices coming down. But I think in many ways, the ECB's job is one of the easier ones. It's the Federal Reserve, I think, that has the tougher challenge up ahead.
Elsa, we haven't talked all week about TRY. And I want to bring it up, and I really don't know what to say about this other than it's a unique political experiment and, of course, the announcement of a new central banker. The fact is, and this is to Steve Hanke at Johns Hopkins, it's frankly, and I'm being inflammatory here, folks, on the edge of Zimbabwe. And the answer is at a 21 out to a 23. It's log, it's massively log convex, and it's out, dare I say, 3.9 standard deviations. What do you presume will happen in this disastrous Turkey?
I mean, it's such a great question, Tom. We actually had this conversation on the desk this morning and pulled up a Bloomberg chart.
Thank you. Good. Continue.
Did a 40-year chart of try, but on a logarithmic scale, which you can do on the Bloomberg terminal. And the reason for doing that is because if you look at it just in the context of the last year or the last few years, it looks like a parabolic move and people are like, oh, well, how much further can it continue from here? But actually, this has happened multiple times in the not too distant past. And I think that 40-year logarithmic chart just really highlights that. So, yeah, it doesn't look great.
Well, very quickly here, I know John wants to talk about actually things that matter, but I'm fascinated here with the new finance minister who Bloomberg knows well. I've done many panels with Mr. Semsek, ex-Merrill Lynch, et cetera, et cetera. And the answer is we're going to get a jump condition devaluation. I'm going to randomly pick out 35 as a wake up on Monday morning start point. And then what? Does RBC perceive Turkey has the what courage to do a full devaluation and reset?
Look, it's obviously a tricky situation to discuss. It's something that we've been trading, but we're not very actively. We certainly don't publish research on it. All I would say is that when your spot devaluation exceeds even the very rich carry on your currency, you have a real confidence problem on your hands.
Arcelinios of RBC, I think that was diplomacy there,
That was
Tom.
diplomacy there. She wouldn't walk off
set.
set. I'm sorry.
There's a question right now. I know, and also thank you, by the way, for joining us. I know how the market's perceiving this right now, Tom, but I think there is a broader conversation about whether there is going to be a return to orthodoxy in Turkey. That question's been asked a million times, by the way, over the last decade, and we've been burnt a million times over chasing that question. But you've got Simsek now in the finance ministry, Tom. You've got Hafiz Erkan, who comes from Goldman, First Republic for that matter as well, by the way, taking up the central bank. You just wonder if this is going to be different, TK, or if we just get more of the same.
That's the hope. I'm hugely biased here. I spent a lot of time in Istanbul in early Erdogan, which is clearly different than middle Erdogan and the train wreck we're in right now.
Completely different
person.
And
I said this, you saw, folks, how a pro like Elsa Lingos really struggled with that because nobody wants to be inflammatory here. But you're right. All of a sudden, there's hope with two adults in the room, and we'll see where it
I used to call this the toughest job in central banking because there was a decision you wanted to make and ultimately you were put under pressure to make a different one. And then it became the easiest job in central banking because you never actually had to do your job. Because Erdogan basically just took over and got what he wanted, Lisa.
And that seems to be what people are kind of betting on right now. It seems like the skepticism is sort of outweighing the hope right now, even though on paper, the hope actually would make sense, just because these are professionals who do understand markets, just whether they're going to be allowed to do anything.
Because of the NATO affiliation, and certainly with the horrific war in Ukraine, one of the pressures that the International Monetary Fund will have to, again, with the hope of this new central banker, the hope of an experienced finance minister, all that Semsek symbolizes. I should point out he's Kurdish. And with these two appointments, does that give Georgieva and IMF more confidence to assist Erdogan to retrench back to middle Erdogan, or dare I say even get back to early Erdogan?
Optics are important, substance more so. On the optics, it looks like they're trying to restore credibility with these two hires, Tom.
Yeah.
Let's find out about the substance in the months and years to come.
I would suggest it deserves its surveillance team road trip. I mean,
to Istanbul?
I can state without question the best food I've ever had on the Bloomberg junket is Istanbul.
Really? What did you have?
Hands down. Everything was good. I just ate and, came back like a bloated chicken.
Really
I was on British Air then, and the plane went like this when I got out.
Did you have to move to sort of wait out on the plane?
Oh,
Is that what happened?
It was just, loved it. And I was very fortunate to be in Istanbul at another time and place. I didn't,
This is what you really wanted to talk about. You wanted to talk about food in Istanbul.
No, you know what I did? I'm over by the palaces, whatever, and I stumbled on the thing that's in James Bond From Russia with Love, where there were the Roman cisterns underneath. And the way they found them is the poor people above the cisterns had the best fish in town. And they couldn't figure out how they had to fish. And they just take a line to their house and put it down to the cisterns, where James Bond's walking around in the middle of the movie. You didn't expect that on a Friday, did you?
A few years ago, Tom and I proposed a documentary that we were going to make. And we were going to go around the world and go to countries whose currencies had been beaten up. And we were going to have meals with locals and an economist and talk about what was happening in the economy and taste the local cuisine and talk about the foreign exchange market. That got axed.
Yeah, it was great. I mean,
Turkish Airlines are interested and want to sponsor.
Oh, boy.
Can make that happen, maybe.
The guy that was running at that time who vetoed that said you'll be lucky to get Weston Newark, New Jersey.
Michael Purvis of Tallback and Advisors on this equity market coming up next.
Food and finance. I like the idea, guys. Keeping you up to date with news from around the world with the first word. I'm Lisa Mateo. Donald Trump has become the first former U.S. president to be charged with committing federal crimes. A grand jury has indicted Trump in connection with his refusal to return classified documents found at his Florida home. If convicted, he could face prison or be disqualified from holding public office, including seeking to recapture the White House in 2024. Most economists expect the Federal Reserve to pause interest rate increases next week for the first time in 15 months and leave policy on hold through December. According to economists surveyed by Bloomberg, the Federal Open Market Committee will keep rates steady at its meeting at the 5 to 5.25% range. Officials face a closer call on what to do in July. The White House is denying a report that China is building a spy base on Cuba that would target U.S. military bases and communications. White House National Secretary Council spokesman John Kirby told MSNBC that the press report is not accurate. Cuba's Foreign Affairs Ministry denied that report. ODS and management is in talks with some of the world's largest investment banks, hoping to convince them to stick with the London firm. Several began distancing themselves from the company after new allegations of sexual assault surfaced against hedge fund manager Crispin Odey. And Morgan Stanley is cutting ties while J.P. Morgan and Goldman Sachs are said to be reviewing their links with the company. Odey CEO Peter Martin says the firm's lawyers are looking into the claims. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The breadth in the market, those 7 stocks representing more than 100% of the gains. Even if you look, it's not a uniquely U.S. story. That's a global story as well, that there's 10 companies representing 85% of the global gains.
Kristen Bidley there of Citi Global Wealth Management on the narrow leadership of this equity market in the U.S. and worldwide. Here's this equity market right now on the S&P 500. Looking to go into Friday's session and onto the weekend, just a bit softer here. We're negative by almost 0.2% on the S&P 500. One of those 10 names, let's talk about it, Tesla. Tesla is up by more than 90% year to date. It's been quite a run so far year to date. We had some more weight to it. In the pre-market, in early trading, we're up by more than 4%. Higher on GM as well, up by 3.4%. GM and Mary Barra yesterday saying they're going to use these EV chargers that Tesla provides. They're going to design the car for that, Tom, in 2025. You get some adapters in between, all that good stuff, and we're moving towards an industry standard.
Tesla has a PE of 68. GM, I can't believe the number, has a PE of 5. But they're both auto companies. You got to be kidding me.
Yeah. And the idea is that GM starts to look a little bit more like Tesla.
That's been the 5-year hope. Yeah, they hired McKinsey to come up with that.
Dan Ives of Wedbush has this to say this morning. An upgrade to his price target. We reiterate our outperform rating while raising our price target from 215 to 300 as the sum of the parts story for Tesla now further comes into play with its supercharger network energy business. Lisa, AI-driven autonomous path, unmatched battery ecosystem, increased production scale scope globally. He's bullish, by the way, adding to the Tesla golden EV success story.
Well, and Dan Ives is a bull, and a lot of people will say this, and here, of course, he's saying this. But this time, there is something different. And Tom, you were saying this is a car company. Is it? I mean, if it's really going to be providing the infrastructure for charging, that's a new angle on an automobile industry that goes far beyond just competing with other auto manufacturers.
I just did a log extrapolation from the beginning of Musk, early Musk, all the way through middle Musk to end Musk, and basically at 234, Tesla is dead on its log regression. This is not overpriced, not underpriced. It's on trend through thick and thin.
What a win, though, for Elon Musk and Tesla, by the way.
Win for Dan Ives.
Oh, no, politically, what a win. The White House...
They've embraced him.
Froze him out. Embraced Mary Barra of GM. Embraced Farley of Ford. Basically didn't talk to him for a long time. And here we are. He's the guy coming up with the industry standard. And GM's Mary Barra's hopping on Twitter to say that, by the way, we'll design the cars and go in that direction. That's a pretty big win for Elon Musk.
I agree. And it's a back and forth. Who knows what Elon's going to do this weekend? We'll be vilifying him on Monday.
Sure, obviously, yeah.
This is why I think this is why so many people are attracted to him. I mean, this is a guy that he's so emotional and so tactical, not strategic, that it's like every 3 days there's a different story. And
Genius
when he's on,
comes with extremes.
Yeah,
how many times have we seen that through history? See it time and time again.
Yeah, we said that about Michael Purvis as well.
We see that all the time, every time he comes on.
Yeah, Are we going to brief this morning?
We're going to get Michael Purvis and his extremity.
We're going to get Michael Purvis. He's going to come in right now. Okay, right now it's Analytical Geometry Friday for everybody who's a bear. Michael Purvis joins us right now, CEO of Tallback and Capital Advisors. First sentence of your note this morning, like me, you're on the x-axis. Everybody's looking at the parlor game and all that, and you're saying for investment, for belief in the equity market, you got to go look out the time function and what the Fed will do there. Discuss the x-axis.
Well, if you look at a history of Fed fund policy over the last few decades, it's in motion, up or down, much more than it actually is just sitting someplace, right? The average time at the end of a hiking cycle is really measured in months, not in years here. Now, one of the things that I think will be very interesting to see, and I think you're starting to see signs of it from Powell, is that there's a lot of lack of clarity about the inflation story, right? Not just, we've seen the surge from the supply shocks during COVID and Ukraine and monetary and fiscal stimulus, right? Call it 3 years of transitory, but that doesn't explain all the other inflationary dynamics. And I think the Fed is recognizing that, not to mention the fact that you've got employment, structural issues, and so forth. So one way to kind of square the circle, for the Fed is simply just to sort of camp out at terminal, if you will, right? Just get, maybe we get another 25 in July, possibly next week, and just stay there, even if the data cools, until you absolutely see 2% is really, right there with a bullseye on it.
As a trader, what's more important for you to track right now? the data that could signal potential Fed moves or what's going to happen on the economic front, or just clear sentiment with respect to investors?
Well, I think it really depends what you're trading. But, I think, look, right now, the velocity of the information that's going to sort of define the contours of where the 10-year trades, the 2-year trades, and all that is a much slower velocity than what we've been looking to over the last year, right? And so last year we had massive volatility, frankly, because the Fed put in, one of the most aggressive hiking cycles we've seen there. That is, I think, you can talk about Silicon Valley Bank and the tighter lending standards. You can talk about whether the cuts are going to get that are priced in will continue to get priced out. I personally think they do, but that's a slower motion thing. So the trade that I think it's been a very difficult market to trade, but the one trade that I have had a lot of conviction on over the last several months is just to be short equity volatility. Now we're down here at VIX with a 13 handle. It's probably time to close out of those types of trades here, because we are pretty low here. But I don't think we should be surprised that we're at 13.
The reason why I ask this is because we've been talking about how bearish everybody is. But in the past 3 weeks, it seems like people are really sick of hearing about bearishness. There's just sort of every time they read something that's bearish, they go, oh, again, you're going to tell me that? We've been hearing that and it hasn't happened, which means that there's sort of a shift toward chase the rally, FOMO, this sort of other kind of mood. How much does that have legs?
FOMO is a very powerful force. Here we are with a NASDAQ, which has led the broader rally at 26 times earnings. We have had some brighter lights on the earnings front here from the NASDAQ, and frankly, from the other indices are now showing some positive earnings momentum. But that is, at 26 times, do you really want to be, if you miss the rally, you sort of feel obligated to. And one of the conundrums for many asset managers is that they bench to the S&P 500, which is weighted by these giant tech stocks. If it was all just materials that was having a great rally this year, it wouldn't be so much of an issue. But when your benchmark is being dragged up by the NDX, which is being led up by NVIDIA at 25 times revenues, it's going to create some problems later in the summer. Right. And, my personal my vectors are focusing on Q2 earnings season, because if the AI narrative doesn't really result in a meaningfully higher earnings outlook, right, and it's just sort of the big tech cost cutting, then I think at 26 times, you're going to be vulnerable.
I got to be quick here. You were brilliant on ADXY in the Pacific Rim. Do you have a Japan bet right now or a China bet that's tangible to year end?
Well, two very different stories, with the Nikkei doing something it hasn't done in a long time there. Look, I don't really have a clear view on Japan, only to mention the obvious thing that a lot of the economic data and some of the inflation data is really waking up. And I think the experiment the BOJ did that everyone was lampooning last year, it was a risky experiment, but I kind of wonder whether it's actually that they're going to be vindicated, and they're going to finally wake up the animal spirits. And then, of course, there's some other structural positive trends going on in Japan and so forth that are going to make those equities more appealing there. China, though, is of course a different story.
Michael, good to see you. Yeah. Michael Purvis, thank you, of Tallback. We've had this rally, guys, with $5 trillion of cash sitting in money market funds. Just think about that.
Oh, the caution.
What's going to pull it out?
I mean, I don't memorize this stuff, but I can tell you that the charts on puts and gloom and caution and cash as a proxy for caution is a cliche off the charts. I mean, everybody's on board the get out of stocks trade, and as Mr. Purvis mentioned, at 13.75, how do you get to 12.75? That's like way pre-pandemic.
Michael Schau's coming up. Great guest to talk about some of this stuff. The CEO of Market Field Asset Management, with some things to say about the leadership in big tech. We'll have that conversation in just a moment. If you are just tuning in, the broader market just a little bit softer, slightly negative on the S&P, still heading towards a weekly gain though on the S&P 500. This week not actually all about big tech. The Nasdaq actually down on the week so far. Yields a bit higher by 3 basis points. 375 on a 10-year. I have to say the bond market all over the place through the week so far. Surprises from the RBA in Australia. Surprises from the Bank of Canada as well. Yields up. Not quite. Yields unchanged, Tom,
not quite.
through
not
the week.
Quite so correct.
Bumpy road to absolutely nowhere.
I look careful 10-year, 30-year in tips, and the answers, there's sort of this feeling.
Not done much. Point to point
radio,
in between,
good,
tons going on, but whipsawed by surprise hikes and weak data. Soft jobless claims going into next week. The final hurdle before the Fed decision on Wednesday, CPI on Tuesday. We'll break down the outlook for you on that in just a moment.
You have excess savings dissipating by the end of the year. You have student debt payments coming back. And so we think it's a consumer that looks a lot weaker by the end of this year.
We're in a world with higher inflation, and we've reset.
One conviction view that we have is this higher for longer narrative globally.
I'm still optimistic that the market is going to move higher by the end of the year into next year.
Ultimately, if you do go into a recession, bad news is bad news.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Back in a bull market, I remember a headline that Tom wrote a long time ago, the most hated bull market in the history of financial markets and all of that stuff. Feels that way so far year to date. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV, on radio with Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market just a touch negative going into the weekend. We're softer by 0.1%. The headlines, I'm sure you've all read them over the last day or so. TK, some big gains year to date.
Big gains in the equity market. They're there. We've been talking about the VIX is just a measurement, the VIX of the volatility of the Standard & Poor's 500, 13.76. And Michael Purvis saying that does describe a bull market. And then what? And the reading this weekend is big on the and then what of it. It's more like almost a October conversation.
The headlines of the last 24 hours, Tom, I think are very much about the story of the last year, which is the dominance of a handful of stocks dominating the S&P 500 and the year-to-date gains and the move off the bottom in October. I think that kind of drowns out what's happening beneath the surface and elsewhere. Lisa, you've raised the right question, I think, about that rotation that people have been waiting for. Is it developing? At the moment, month to date, the Russell is where the move has been.
And it's been led by some of the small regional banks as well. I mean, you've seen a recovery in other places. It does seem to be broadening out. And I wonder about Michael Purvis's comment there, that when you get to mid-year and you look at the headline S&P, even if it's tech driving the force, do people start to catch up with the other names to try to make sure that they can keep their shirt?
How many people have enjoyed this from October rally, the Yardeni Ankampora rally? How many people really have enjoyed it?
Deutsche Bank, Julian Emmanuel Evercore. There's some names out there, but there's two dominant, prominent names
Neil
that stick out.
Neil Dutta and his team, DeGraff over at Renaissance.
Mike Wilson, great year last year. Morgan Stanley struggled to call the index this year. Marko Kolanovic struggled last year, struggling this year over at JP Morgan. It's been difficult, Tom, for a lot of people, and they've sat there, they've waited. You've been paid to wait in cash, you get 5%, and you're asking how many people are participating. I can point to $5 trillion that's not participating in money market funds, Tom, that has sat this out.
They're making 5%.
Sat this out at 5%, and
that's
that looked good at the start of the year.
Performance.
That doesn't look good in the middle of the year.
Well, it's a big debate, and of course it sets up around rates with the inflation call on Tuesday. We'll dive into that. John, can I give you some good news? I have an offspring in Shanghai who taught me air matters. He looks at this thing religiously for his children every day. New York is 87 on the list, down from like number 3 yesterday.
We're doing better.
And we have green. We have green on the screen. It's 44, which is a really good
blue in the sky,
Paris-like
TK.
number.
Green on the screen. Beautiful.
Good morning, Atlanta. Washington is worse than New York by a bit. Atlanta's actually worser air than Washington. I did not know that.
It's been pretty bad. I mean, Lisa, for you and I, you go running. I was trying to work out yesterday. You can feel it.
I don't go running on a day like yesterday or the day before. You can feel it. And
you were
2
running
days
in
ago.
this stuff?
No.
I didn't run in this. I tried to work out yesterday. It did not work out.
I will say, walking through the parks, I walk instead of run with a mask on. Walking through the park, it was empty. It felt, you know, especially on Wednesday when it was sort of orange out.
Back to the pandemic.
Yeah, it felt back to the pandemic, except for a few hardcore,
on your own with no one around you with a mask on. Like truly back to the pandemic.
Exactly. It was exciting.
We were told to. It's healthy. It's better for you. Your equity market on the S&P, slightly negative on the S&P 500. Just a bit softer. No real drama here whatsoever. Yields up a touch by 3 basis points. I think we can call that yield 375, Lisa, going into the Fed next week.
And going into the Fed, it has been a quiet period for the Federal Reserve. Not a quiet period for ECB officials ahead of their Thursday meeting. So we do get some commentary from Vice President Luis de Guindos and Supervisory Board Chair Andrea Enria speaking ahead of that Thursday meeting. 4:30 p.m. The H8 report from the Federal Reserve, a key release showing the flight of money into money market funds from deposits. Okay, we're talking about they're just earning 5.5%. How terrible for them that they weren't in NVIDIA and some of the other shares. Yes, but on the other hand, after earning nothing, you're now earning 5.5%. And at what point does that actually stimulate spending with some income? It's something I really am curious about. And tomorrow, it's a big day in sports. There's nothing really going on in markets right now except for these sort of navel gazing. So we do get the French Open tennis women's singles final in Paris, Belmont Stakes in New York. And Man City is taking on Inter Milan at the Champions League, which I think is going to be really interesting.
Does Inter Milan have a chance against the juggernaut?
Big underdogs. But someone I'd really like to do well, Simone Inzaghi. Simone Inzaghi
I thought the same thing.
Is the coach of Inter Milan. When he was a player, he had to play second fiddle to his brother Filippo. Filippo was so much better, World Cup winner, played for AC Milan, Champions League winner. His brother was always in his shadow. It would be nice if he could do something as a manager.
Does Manchester United have any hope of gaining the glory of the modern Manchester City? I'm asking for a friend.
What do you mean, Tom? What do you mean by that?
Just for Manchester United to get the excellence.
You'd like to see United come back and topple City? Is that what
I
you're
don't
asking?
know. What do you think?
I'd love to see it.
As a Manchester United fan, Michael Shaw, are you a Liverpool household or a City household? What are you at the moment?
At the moment, it's Liverpool.
It's Liverpool,
which has been absolutely
so
devastating.
who gets supported on Saturday? The house supports Inter or City?
I think City probably. That's
okay.
my guess.
All right. Just figuring things out with Bramo TK. You ready to introduce the guest? Okay, Michael Shaw,
you can
CEO of
introduce the
Market. It's amazing. It's amazing to see him totally lost for words when you brought this up.
It won't happen often.
Okay, helpful, Tom. Michael, good to see you. We won't talk about Manchester United. Don't worry. We'll talk about this market. I think Lisa asking the right question this morning. Is the rally broadening out? You seen signs of that?
I mean, I hope so. Yeah, I mean, the last 10 days or so certainly have had a much broader feel to them. Sort of week Wednesday to Wednesday. The S&P was up 2, the equal weight was up 4, and the Russell was up 8. And I don't think that sort of 4-to-1 is sustainable. But if a lot of this stuff has been left behind, I think the overall state of the economy is better. It's certainly much better than people expected it to be. If you went back to last December and saw what people thought the first half of the year would look like, most people really thought we'd see a big deterioration. That hasn't happened. So I think sort of real economic activity is much better than people would expect. And the question still is, what does financial engineering look like with rates at 5% and probably going higher?
Michael, it has been a tough year. It has been one of the toughest years I can imagine, exhausting, a lot of people will say, unless they were all in on NVIDIA. And I'm wondering if you've missed it. What do you look for to know whether this is going to be a FOMO or a MABU or whatever you want to call it, and it's going to keep going for a while, or if it's basically luring people in to just be, annihilated in a couple of weeks?
I think anybody's going to get annihilated in a couple of weeks. I mean, I think it takes time for a confident, if to call it a confident market like this to fall apart. It would take something different. As I say, I don't see any real deterioration in the economy. And I don't think there's a lot of downside in cyclicality, which is, that's still a fairly cheap part of the market historically.
So you're going into equities right now?
We have been in cyclical equities this year. It hasn't really worked so far. But I do think that a sort of more optimistic overall mindset will lead people to understand that the economy is okay, and the cyclical portion of the equity market, I think, can play catch-up.
I look, Michael, back at the analog of the 70s, and granted it was a horrific recession versus a horrific pandemic. We came off the bottom in 1974, up 52%. World's going to end, that's it. There's the bounce, short squeeze, whatever. And then we went up another 29% into 1976, 77 as well. How do we generate a second leg to a bull market that started in October?
I don't think it's... The bear market last year wasn't like 74. We used that 74 analog a lot back in 2008. When people really thought the world had ended. But as I say, I think that there's room for the average equity market. The S&P equal weight only crossed back into positive territory for the year this year. There's room for a lot of what do they call them, average equities to do okay in this kind of an environment. I'm still of the belief that at some point interest rates are going to be the story, and it's more likely to be the longer end of the curve rather than the short end of the curve, I think this time that causes some disruption. But I think between now and then, I would be hopeful that certainly portions of the global markets, Asian markets, have really quietly had a very good year this year. It's not just Japan; it's markets like Korea as well, and the sort of cyclical portion of the U.S. equity market, I think can generate okay returns.
Does Asia develop a disinflationary pulse that assists the U.S. markets?
No, I think it's just the sort of quality of corporate earnings over there is better than people expect. And, I'd say a market like Korea is still a pretty cheap market out there.
We've had conversations with you over the last several months about the prospect of a lost decade of returns at the headline market cap weighted S&P 500. A few months in to the year, and already we were talking about US exceptionalism driven by 5 big names on the S&P 500. It doesn't feel like the conversations change. Is that just a 6-month moment in time that we leave behind, or are you questioning maybe some of the ideas that we were discussing in the last few months with you?
No, I mean, I still think that the headline index, that sort of great year it had in 2021, I think you're going to pay for it. I think you're going to pay for it for several years. The S&P is still 15% below its peak in 2021. So you have a good way to go. But I am surprised and impressed by this new wave of enthusiasm. It took something new for people to get excited about, that they've been given it with AI, and this thing will have to run its course.
Let's just build on that a little bit more. In the last decade, we had FANG.
Yes.
Europe didn't. And now all of a sudden in 2023, we have NVIDIA and others, and Europe does not. And I think that's part of the question too, whether we can really get this global cyclical story going at the equity market level, with that being the dominant equity market story of the moment. Is that competing with the way you were thinking about things coming into 23?
As I say, yes and no. As I say, there's portions of the global market which have behaved as I would have expected. As I say, some of these like boring cyclical indexes have really had a good time of it on the other side of the world. Within the US, those sorts of equities simply haven't performed in the way we would have wanted them to do so. And I think in the US, there is a process of capital being sucked into the big technology names away from the part of the market we like.
In dollars, Korea up 36% off the bottom, SPX up 20%.
Get a chart of the Nikkei. Get a chart of the Nikkei up. Yeah, Japan as well. Yeah. Michael, this was great.
Thank you.
Thank you. Fantastic to catch up with you. Michael Schall of Market Field. Supporting Inter Milan, I think.
I will be.
This weekend, no doubt.
Forlornly.
Binky Charter at Deutsche Bank coming up in the next hour. Looking forward to the conversation. Binky thinks we can get out a few more 100 points on the S&P.
Has Binky nailed it or what?
It's doing better this year.
Wow.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. New Yorkers can breathe a little easier today. City environmental officials say the air quality improved overnight to moderate. Still, people sensitive to pollution are being advised to take precautions. New York's air quality index improved 100 on a scale of 0 to 500 early today. That reading reached the most serious level of hazardous earlier in the week as smoke from the wildfires in Canada moved across the U.S. Northeast. Tesla shares are poised to rise for a record 11th consecutive session, matching the stock's longest winning streak set in January 2021. That after General Motors said it would adapt its electric vehicles to Tesla superchargers. It follows a similar move from Ford. Tesla shares have risen more than 90% so far this year. UBS has sealed an agreement with the Swiss government to cover $9.9 billion of losses it could incur from the rescue of Credit Suisse. Now, that clears a major hurdle to closing the historic takeover. The agreement covers about 3% of the combined assets of the merged bank. And Bank of Japan officials see little need to adjust its yield curve control program. Bloomberg has learned that a move is unlikely at next week's policy meeting, given the improvement in the functioning of the bond market and the smooth shape of the yield curve. Now, according to a Bloomberg survey, nearly all economists expect no major policy shift at the meeting. I'm Lisa Mateo, and this is Bloomberg.
I'm an innocent man. I did nothing wrong. and we will fight this out just like we've been fighting for 7 years. It would be wonderful if we could devote our full time to making America great again. And that's exactly what we did. But now, again, our country is in decline. We're a failing nation, and this is what they do.
The former president of the United States, President Trump, there on Truth Social. In the last 24 hours, the former president indicted over his refusal to return classified documents found at his Florida home. This according to 3 people familiar with the matter. The next steps over the next week, the former president, Donald Trump, told to appear in federal court in Miami on Tuesday, Tom. So this one is going to pick up through the weekend and into next week.
I thought the brief from Terry Haynes earlier was great, which is this is not a time to be a lawyer or to play junior lawyer. And what Lawfare blog, Scott Anderson and Ben Whitty say what is really important, we're blind until Tuesday. So it'll be an important conversation. But everyone, including the president, is blind on this.
We're working on our reporting from our colleagues here, Tom.
Yeah.
The US charges include document retention and conspiracy to obstruct. That's the latest reporting at the moment.
Yeah. Emery Horton with us right now, our chief indictment correspondent in Washington. It seems to not go away. We were talking state court in New York. There's issues in Atlanta, maybe coming, who knows. Was this a surprise for Washington to see this? It's got to be that you knew it was coming, right?
It wasn't a surprise because we did see recently Trump's lawyers show up in Washington, D.C. They were at this meeting at the Department of Justice. What was more surprising is this wrinkle that there's also been a grand jury taking place at the same time in Miami. And this was something that if
Explain that. What does that mean?
Know that.
No, that is very new. We learned about that last week reporting from the New York Times. So when the document case started, it obviously started in Washington, D.C., because these documents were taken from the White House. Then, of course, they were found in Mar-a-Lago. We all remember the search of the former president's resort in Palm Beach last year from the FBI. They were going after these classified documents. There was a subpoena to collect them. He didn't oblige. So they went after these classified documents. So now when the special counsel was looking into this, everyone thought the grand jury was just taking place in Washington. But now it's happening in Florida. And Florida is a place where the former president has a lot of support. It is a state he won. It is his own turf. So everyone thought that if there was going to be this indictment in Washington, he would certainly try to move it to Florida. But now it's already happening in Florida. So that's the wrinkle that I think most people were surprised about. Not that he wasn't going to get indicted.
This year, we've seen it a million times. How many former officials, current officials have documents, have found documents, didn't know they had documents. Do we know so far about what's different about this case with the former president compared to, say, others?
So 2 things. One, we already see that Mike Pence, who's now also running for president, he has been cleared. Biden, there's still a special counsel looking into his case that is still pending. 2 things that are very clear about Biden and Pence. They invited authorities into their home to come in, canvass areas, even their second home, their offices, to collect the documents themselves. The former president was asked by the National Archives to give back the documents, and he did it. And you have Bill Barr 2 days ago on CBS This Morning saying, this is a case of his own making. This is the former president's own attorney general saying he was just jerking around the Justice Department. If he had just returned the documents, he says that the DOJ has provided a lot of deference to the former president, but if he had just returned the documents, this case really would have went away.
We're not lawyers. We can't necessarily weigh in on charges, especially because we have not seen them laid out in the indictment. But we can get responses from political opponents, including from the Republican Party. And that really may be one of the key questions over the weekend. What is the response of the other candidates? Do they back him or do they step away and say this is a reason why he shouldn't be president?
Yeah, I think this is going to be a real litmus test, right? Every single Republican candidate is now going to be asked, will you pardon the former president if he is supposed to be going to jail? Some of these charges, and again, we don't know everything, but we potentially could get the indictment today. That's under seal. Some of them come with 20 years prison sentences. Some of them come with 10 years prison sentences. They're all going to be asked, would you pardon the former president? And that's going to be a difficult one for individuals to answer. Mike Pence couldn't answer that at the CNN town hall. He said he wouldn't want to deal in hypotheticals.
Is there still a fear of deep state in the broader population that will percolate out in poll numbers?
I'm not sure it's in the broader population, but it certainly is in the 30%. of the base of the Republican Party that Trump has a handle of. Listen, every time the former president is faced with a massive hurdle, with a lawsuit, his numbers go up and his advertising campaign donations also go up. The bigger question as well is, as this continues, and Tom, you mentioned potentially what happens in Georgia, potentially there's another suit Letitia James is looking at into his company here in New York. Do all of these just start to become so overwhelming and you become Trump legal fatigue, and potentially he starts to lose some of those would-be voters?
I point to Lisa's comments on pardoning that, folks, there's a huge issue in the zeitgeist right now about Gerald Ford and Richard Nixon from a few years back as well. Is it safe to say that the contributions the President Trump is getting are paying for his legal bills?
I'm not sure.
We don't know.
I'm not sure that would be fair to say right now. Potentially some of them, though.
I'm thinking he's got, what, 3 geographies? Is that right?
In
to
terms
deal
of
with? New York, Atlanta, Miami?
No, 4.
4.
New York, Atlanta, Miami, and also Washington is still looking into the insurrection.
I find it extraordinary, this process. What will you look for in the next? Well, what will you look for Tuesday? Let's focus on Tuesday. We're not going to get what we saw before, which is cable TV news monitoring John for what?
Are
was
we
it,
not?
8 hours?
Why wouldn't we? I mean, the president. It's a very quick drive from West Palm Beach to Miami. He's at the moment, I believe, the former president though is in New Jersey. He'll be obviously likely be flying back to Mar-a-Lago before he goes to Miami. But I imagine cable news will be following his road down from West Palm Beach to Miami. It's a beautiful drive.
Do you know a good lawyer?
Do I know a good lawyer?
I've been cleaning out some stuff.
Have you found some
and
documents?
I shredded Good Morning Heidi Prisbille at Politico, a photo of me and Heidi with President and Mrs. Bush from a few years ago.
Is that going to get you in trouble? Was that
I think it
classified?
could be a felony offense.
What was the photo of?
We shredded the Christmas party.
Is it Tom with a Republican?
You make
no.
It's the Christmas party. Anne Marie goes to it every year. I mean, it's the White House Christmas party, and you do a photo with the president.
I want to build on something Lisa said to wrap things up. Lisa asked about the candidates being asked to whether they'd pardon the former president. Just to go one step into that conversation a little bit more, I just wonder, for the likes of Governor Christie, isn't this part of the pitch? Isn't this part of the pitch for some of those candidates? Don't they come out and say, this is it, the former president is clumsy, this is the way he behaves, it's reckless, and et cetera, et cetera? Does it go in that direction?
Well, the issue is that the former president is innocent. You're innocent in this country until proven guilty, and that is the tone the former governor of New Jersey took. So Chris Christie said, let's see the facts are when there's a possible indictment, when that's released. As I've said before, no one is above the law, no matter how much they wish they were. We will have more to say when the facts are revealed. So a lot of individuals will also want to punt. They want to give themselves some time. They want to make sure that now that they are running against the former president, they can't be seen as trying to weaponize this, and they're going to play it, I think, some of them very straight.
Interesting. It will be very interesting to see how that develops over the weekend. That's for sure.
Garrett, Red Sox, Yankees. Where are you sitting?
We're doing baseball.
Where are you sitting?
Is that going on?
I'm sitting behind home plate, of course.
Are you going,
Why
to
would I
the game this
expect
weekend?
otherwise?
Are you? AMH, it's good to see
I
you.
bought a ticket for Tom.
Are you going to the game this weekend?
The Red Sox, folks, this is important. The Red Sox are so weak in this division, they're bordering on the 1965 Red Sox, which ruined my childhood. I was scarred. They lost 100 games. Frank Malzone is the only reason. Dick
How many
Raddatz,
games did they play?
Like 160 games, and they lost 100
And they lost
of them.
100.
Yeah, worst team ever.
Wow.
There it was.
Say that again. Boston Red Sox, worst team
Worst
ever.
team ever.
Thank
Can we
you.
put that in a banner? Can we get that in a banner?
Garrett Cole
Keene
is
says.
really fun to watch. He's really impressive, I have to admit.
Is Judge back?
Love it.
I don't know.
No, I don't think so.
I don't think so.
No, he's hurt.
Okay. Is that the end of the baseball
It's
talk?
the baseball
That
talk.
was
Let's
fun,
get
all
back
right.
to Manchester City.
Kathy Jones is coming up. Charles Schwab on a mid-year outlook. We're going to catch up with Kathy in about 5 minutes' time. Look out for that conversation on the data front. Really
Look at the
light
NASDAQ
on the economic data front at the moment going into next week, but it picks up next week. On Tuesday, CPI data, on to Wednesday, and the Federal Reserve. Equity futures just about unchanged on the S&P 500. Yields just a touch higher by 3 basis points, 374.91, and the euro just short of 108 at the moment, 107.70, and negative about 0.1%. Getting you to the weekend live on Bloomberg TV and Radio. Equities on the S&P 500 shaping up as follows. On the S&P, we look a little something like this. Basically unchanged, going absolutely nowhere. On the Nasdaq, we're positive by 0.08%, more than positive by 0.08% on the year. Flying. On the S&P 500, off the lows of October, up by more than 20%. You're going to wake up to a lot of headlines about bull markets and narrow leadership and 5, 6, 7 names on the S&P doing all the heavy lifting. More recently, though, month to date so far in June, some of the small caps, the Russell, starting to pick up the slack just a touch. The Russell this morning down by 0.1% on the month. For the month of June, up by around about 7% or so for the small caps. Let's see if that continues. And to Lisa's point, whether this equity market rally so far this year begins to broaden out.
That's the distinction this week. The small cap move is a distinction this week. Michael Schill brought this up. And it's, for me, it's a new conversation. It's not a bank conversation per se. It's there. Granted, the banks, but it's a new part of it.
Will it continue? This is something the likes of Bank of America and Savita Subramanian are looking for more of. Savita pointing out that Apple is bigger than the Russell 2000, which is something worth thinking about. In the bond market, the 2-year, 10-year, 30-year looks a little something like this. The 2-year, I have to say the bond market stuck between a rock and a hard place this week, just whipsawed by surprise rate hikes on one side, pushing yields higher, and then soft economic data yesterday, jobless claims pushing yields lower. Then it's on to CPI on Tuesday, the Federal Reserve on Wednesday. Good luck out there. 455 on a 2-year, 374 on a 10-year, yields higher by about 2 or 3 basis points. I do want to finish on a single currency, the euro, and just talk about the revised economic data that we had out of Europe in the last 24 hours, suggesting that we've had 2 consecutive quarters of negative growth. Most people call that a recession, but I haven't got time to have that debate with you this morning. We have had no growth in Europe in Q4, no growth in Europe in Q1. And yet still we have an inflation problem. And I think there's a much broader conversation to have about the economics of that. Guy Johnson bringing up this point out of London yesterday. That's a problem for the ECB, Lisa, and maybe even a problem for the Federal Reserve. We're talking about the softer growth they were looking for, hoping for. That was an objective, almost a target, to get inflation down, and they've had it, and not much happened.
And so how are they going to justify not hiking rates at a meeting where it's clear that any kind of weakness isn't really exactly all that painful? What I'm watching, we've been talking about it throughout the morning, Tesla coming out with a huge win, General Motors saying that it will use its electric vehicle superchargers, and really got on the bandwagon that Ford had already gotten on. Basically, is Tesla still a car manufacturer, or is it the infrastructure for a broader EV network in the United States that is adapted by some of the other auto manufacturers? Those shares up 6%. I believe it is the longest streak. I believe 11 straight days of gains on Tesla, the longest going back to 2021, one of the record lifts. We've seen General Motors shares up 4.7% as well. Carvana, fascinating to me. Today's move, nothing to write home about. But yesterday, a record 56% surge. The short positions absolutely decimated. All these people trying to leave this company for dead. And it came out and said, we're improving. And everybody who was trying to short this company got blown up.
50 to 350. I think that's a moonshot. Cratered.
What are we looking at?
Carvana,
Okay,
left for dead. CVNA, left for
Just
dead.
making sure, you never know.
9 to 24. See the abuse I get here, Kathy? It's just terrible. 9 to 24.
That was nice.
They made it back to 24.
Okay, I understand. You can talk about levels, you can talk about percents. The point is, people are looking for the companies during the pandemic that were left for dead, and they've been trying to pile on, and then, oh yeah, they're not dead yet. It hasn't been the zombie roll-up. And another one, DocuSign, really bid up during the pandemic, and what you have right now is you have shares up more than 5% after coming out, raising their outlook, seeing better than expected earnings. Again, some of these companies that grew up during the pandemic are adapting and adjusting, Tom, and here they are, and they're actually delivering some of the results.
She's on it today.
She's on it today.
Here's what we wrote the script for.
She is. That was good.
She's just killing it.
What do companies do, Tom?
Is it too early for a beverage?
They adapt and they adjust. Charles Schwab out with their mid-year outlook. Kathy Jones and the team weighing in on the Fed, writing this. We look for the Fed to keep its policy stance largely on hold in the second half of the year. Although one more rate hike is possible, a shift to easing policy would only likely be seen if the economy were to fall into recession or if financial stability issues were to re-emerge. TK, that's their view.
That's the view of Charles Schwab. Kathy Jones joins us right now. They're fixed income strategists. And I'm going to go to someone we were talking about with your exquisite ability to play piano, which is Gershwin George, where he said, life is a lot like jazz. Boy, you better improvise. How do you improvise in the bond market with the oddity of post-pandemic economics and the oddity of the ambiguity, I should say, almost about where we are right now.
Yeah, I mean, I think that's really the challenge not only strategists have, but also the Fed is facing, right? How do they set policy in an environment that's really very unfamiliar? The way we've been doing it is simply either barbelling or laddering, and not trying to play every little up and down in the market. So if, you can stay short and try to roll out and time it perfectly, but there's a lot of reinvestment risk if you miss it because these moves are so fast.
Are you doing this with combining your work with Liz Ann Saunders? Are you doing it with the understanding there will be a jump condition in the short end or even a dramatic movement in the long end, or do you see sort of stability out there as you barbell or ladder?
Yeah, we think in the bond market it'll be more stable. We had huge volatility in the first half of the year, and I think that was the market readjusting to Fed policy and all the surprises that we've had. And yet we haven't gone anywhere, right? We had all this volatility, and yields pretty much from 2 years out are about the same as they were at the beginning of the year. But we think second half should be somewhat more stable, I mean, barring some sort of crazy financial market event that seems to happen every 6 weeks. But barring that, I think that we should have a fairly stable move here.
There's this sort of renegade theory out there right now, trying to justify perhaps some of the moves and some of the resilience in the economy, or else it's just true, which is we've been talking about the lure of 5.5% on cash as a negative, as sucking liquidity out of the market. But some people say it's actually stimulative because all of a sudden you can get returns on your cash, which gives you more money to go out and spend that much more. Which is it?
I guess that's a tough question to answer. I think the 5%, the higher yields are more punishment than reward, right? Because the number of savers that are actually benefiting from that are doing fine, but you have a whole bunch of people who are companies and individuals trying to borrow, either get a mortgage, a car loan, companies trying to refinance at higher rates. I would say it's more negative than positive.
It's negative in theory, but this is what I keep hearing from people, that nobody who's buying a home is paying 7% mortgage rate. Everybody's getting some other mortgage rate. Companies can get pretty low rates if they're a good company. On average, they're high, but those companies that have to pay through the nose aren't borrowing at those rates. So this interest rate effect, the punishment, isn't actually bleeding into the economy, and the reward is actually driving even more investment. Is that an accurate way to understand the dynamic that's been so confounding so far this year?
Well, I would say the credit conditions have been easier if you go to the capital markets than it would normally be under these circumstances. But if you're like I say, you're a low credit borrower, those costs really are going up, and we're seeing a lot of weakness at the low end of the credit spectrum. And I think it's just a matter of time. It's hard to believe that we can have all this tightening, 500 basis points in a very short period of time, QT also at the same time, and not have an economic effect.
1 year forward, laddered or barbelled, whatever the blend is, full faith and credit, corporate, are you clipping a coupon or can you actually manage and position for total return?
I think that the bulk of what you'll get will come from the coupon, but you can position to get some total return.
You're going to give me a double-digit total return?
Not double digit. I think that would be very unlikely.
If I don't get 11%, I can't come to Schwab.
No, I'm sorry. No, I think 11%.
Well, that was just, folks, I'm busting chops with Kathy Jones. That was a discussion from about 10, 12, 20 years ago. That was fun, wasn't it?
It was. It was.
Can I give you a stat to build off what Lisa said?
Please.
1/3 of homes in this country bought with cash.
I noticed. I'm glad you bring that up.
Highest share in like a decade. That was also the stat, by the way, for the whole of last year, too, from Redfin. So 1/3, Lisa, to your point.
Yeah, they're bought in cash. And then the others are bought from developers straight up that are offering them much lower rates, or they're refinancing existing, or they're sort of taking on other loans for lower. Again, the point being, the impulse isn't making its way into slowing the economy in a material way. And this is the reason why people are wondering, why hasn't it been more painful?
Oh, they're buying new homes because old ones aren't for sale.
Exactly.
Because they've got people in them with mortgages at 3%. This housing market is totally distorted.
Completely.
It's totally distorted.
I would suggest it's always been distorted, and the pandemic made it shockingly. I mean, the rent now is $4,300 something. Jonathan Miller Samuel.
It's nuts. But ask yourself this, Tom. This is a big question to ask, and it's connected to monetary policy and builds on what Lisa's talking about because it's so important. Are the long and variable lags longer, like 30 years long, because mortgages at 3% are like 30 years long and everyone did that? I hope you did that. I didn't do that. I wish I had done that, using the term everyone loosely. Or are we just finding out this economy is way more resilient, Kathy, and that 5% doesn't get it done?
Yeah, I think it's the long and variable lags are longer. And, let's put housing aside and let's look at all the other costs that are going up. And also the fact that we've had sub 2% growth now for several quarters. Manufacturing sector is really very weak. And we're starting to see the ISM numbers on the service side come down as well, new orders. So I think it's been longer because we had such a fiscal and monetary policy response to the pandemic that it's taking longer for it to work its way out. But it's hard for me to believe, again, that that's not going to happen over time. And I think that's the Fed's whole hold on to high rates, because if inflation continues to come down, holding is tightening. And particularly with QT going on in the background.
This is such a good point that's missed by so many people, and I totally agree with you. You can keep the nominal rate steady, but the real rate shifts. Right. That's the point, right?
Right. And real rates are up. And if they stay up for another year or so, that's going to have an impact on the economy.
Okay, 10-year real rate 1.54%. I modeled out 2.05% as sort of before all this idiocy. Do you people suggest we'll see a 10-year real rate that'll migrate back to the sort of the moving averages of another time and place?
I think 2% might be a little bit on the high side for a 10-year, but we'd be actually looking at tips right here and locking in some of those real yields.
Interesting. Kathy, it's good to see you. Kathy Jones at Charles Schwab. Wonderful conversation. So hard to relate to the idea that a third of the houses sold here are bought with cash. That, the distinction between the haves and have-nots. If you're not one of those, you're thinking, are you serious? Really? A third of housing in this country is bought with all cash?
Guess who's buying that? Guess which third of the population?
Yeah. But you've heard this from me before. It's not news, but I'm in the camp where we've wildly disaggregated as a society. And yes, it's the haves, the have-nots. It's the two Americas. Maybe it's three Americas. But there's an America out there loaded into property and foreigners as well with cash.
Nadia Calvino coming up. Conversation you don't want to miss with the Spanish finance minister. Need to talk about the drought in Spain. Bramo's concerned about the olive oil supply.
It's bad.
There's a lot to talk about here. Your equity market just about unchanged. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. New Yorkers can breathe a little easier today. City environmental officials say the air quality improved overnight to moderate. Still, people sensitive to pollution are being advised to take precautions. New York's air quality index improved to 100 on a scale of 0 to 500 early today. The reading reached the most serious level of hazardous earlier in the week as smoke from the wildfires in Canada moved across the U.S. Northeast. The UK has posted fresh health warnings through the weekend. Soaring temperatures caused by a blast of hot air have pushed the nation's health security agency to issue an alert for parts of the country from Friday, signaling risk for people over 65 and those with pre-existing conditions. Now, temperatures will reach nearly 82 degrees in the British and German capitals on Saturday. Binance is being cut off from its banking partners after a lawsuit from the Securities and Exchange Commission. The cryptocurrency exchange says it could happen as early as next week and told its customers that it's suspending USD deposits and recurring buy orders from transitioning to a crypto-only exchange. Binance calls the SEC's allegations unjustified. Former Barclays CEO Jess Staley has been out of sight for more than a year and a half as the revelations about his relationship with disgraced financier Jeffrey Epstein piled up. But in New York this weekend, Staley is scheduled to give his version of events for the first time. A pair of lawsuits allege he witnessed an assault on a young woman and may even have participated in a sex trafficking ring run by Epstein. Staley's lawyers deny the allegations. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
You've had a slowdown in activity, and yet inflation still remains kind of uncomfortably high. It's definitely a lot easier than it was a few months ago because, again, you've got those base effects, you've got energy prices coming down. But I think in many ways, the ECB's job is one of the easier ones. It's the Federal Reserve, I think, that has the tougher challenge up ahead.
Fantastic to hear from Marceline Yosser, the Global Head of FX Strategy at RBC. Just commenting on the weakness we've seen in European growth in Q4, in Q1, and the lack of progress we've made on inflation. With that in mind, the ECB coming up next week after the Federal Reserve, looking for a 25 basis point hike from the European Central Bank. Still up in the air as to whether the Federal Reserve makes a move on Wednesday. Tuesday might be the deciding factor. We get CPI inflation data here stateside on Tuesday morning. Just to quickly touch base with the price action for you on the S&P 500, just about unchanged going into Friday's session. Absolutely unchanged on the S&P right now after closing yesterday in a bull market. Tom, tons of commentary about the narrow leadership, tech stocks doing the heavy lifting. Just a little bit more this morning about a broader conversation about maybe the potential of this equity market rally broadening out.
And certainly the June 30 reset of mid-year is happening a few weeks earlier here is the bears and those in cash. I'm not going to call the people in cash bears, but the answer is there's a humbled tone on this Friday.
Well, I can tell you the bulls. I just caught Binky Chana at Deutsche Bank out of the corner of my eye. And Binky's going to catch up with us, I think, in the next 10 minutes. He's looking for 4,500 on the S&P.
In the inflation report next week in the Fed meeting, what we're going to do is really focus here on the guesstimates forward. Right now, we are going to digress. And we are thrilled to bring you someone who runs an economy that is better than good. She's picking up a trophy in New York this evening. Nadia Calvino is Spanish Vice President, Minister for the Economy and Digitalization of #1 performing always Spain in the continent of Europe. John, why is Spain always a #1 performer?
We're talking about football.
The pixie dust there.
We're talking about football.
Well, I
Real Madrid,
football or
Barcelona.
Yeah, you know. I mean, there it is. But the answer is Spain is unique. We're thrilled that the Vice President could join us this morning. Thank you so much for joining us. I've got to go to the weather. IMF will meet in Marrakesh, and the idea is there is a drought in Africa coming over that will grossly destabilize the agricultural dynamo that is Spain. And quite frankly, there's worry about drinking water as well. How urgent is the drought in southern Spain?
Well, it is a very serious issue because Spain is a world superpower in the agri-food sector. And so the drought is having an impact on the harvest in some areas, having to do with cereal, for example. But drinking water is guaranteed. And we're investing very heavily, actually more than 6 billion euros, in the digitalization of water management and the efficient infrastructures for water management. You may know or not that Spain is the second most efficient country in the world after Israel in water management. And so we're heavily investing in that so that we can continue to be highly performant.
There's so many other issues. I'm going to leave it there, but there's much to talk about on that. I'm sure we will in the coming months. What has changed is you and Mr. Sanchez have a snap election to deal with. Our Alonso Soto says this is absolutely front and center. How will you approach the snap election?
Well, you know, the economy is performing, is outstanding, as you rightly pointed out. It's better than good.
There? I read the notes. I did okay.
Yeah, you did very well. Actually, it's better than good. And indeed, I mean, the strong growth, strong job creation, inflation is down to around 3% already in Spain. So the performance of the economy is outstanding. And I trust, you know, that Spanish citizens will actually.
But why is there a snap? I don't mean to interrupt, but this is important. The political turmoil in Spain is tangible. Why, given a good inflation and good economy picture?
Well, we had regional and local elections, and what we saw there was a rise of the right and, more importantly, the extreme right. This movement is not only happening in Spain. You were talking about it. Of course, it's relevant here in the U.S. It is happening throughout the EU, and this is a movement that I personally hope it does not continue. And President Sanchez decided to call the snap election so that we can have clarity. Spain will take over the presidency of the EU in July, and we need to have clarity and a stable government and not be, you know, in the middle of a campaign for the presidency.
There's still work to do before we get there. Vice President Calvino, one thing you mentioned there was the drought, and that's had an effect on price pressure. Now, you've made some progress on inflation. You do have an anti-inflation package due to expire at the end of this month. Is that something you're thinking about renewing
Well, we're assessing which measures we should continue to have in the second part of the year and which do no longer make sense, because the evolution in international energy markets, you were just discussing that energy prices have gone down. We are in pre-war levels already. So we have to see whether those measures should continue or not beyond June. And likewise for VAT, so indirect taxes on food and others.
Could you give me some insight on that now?
No, because we're in the midst of the analysis, and what we have been doing since the pandemic hit us is adjust measures every 3 or 6 months so that we could have a flexible approach and an efficient use of public resources. I mean, we talk about public money when we reduce taxes or we give public support, and so we have to be very focused and very efficient. This has worked well so far. And that explains why the Spanish economy is doing so well. And we should continue on the same line of responsibility and effectiveness.
How much have you enjoyed the euro being weak versus the dollar and sort of the tourism boom that has emerged on the heels of that?
Well, we've seen a very strong performance of the tourism sector indeed, and April has been a record month in terms of number of visitors and in terms of the revenues of the sector. And we expect the summer to be also extremely positive. But the current account surplus that Spain is showing, and this is a historical first, never in history did we have this surplus, particularly when we have so strong growth. But what's remarkable is not the good performance of tourism exports, but non-tourism related services, showing that the Spanish economy is gaining competitiveness and market share. Not only the goods sectors, but the non-tourism related services are being, very positive and pulling growth up.
Is that what you're trying to emphasize right now? The sort of manufacturing side, the non-tourism side, even as the tourism side really is one of the main drivers of the strength that has in some cases been unprecedented in Spain?
What I think should be highlighted is what we're talking about is not just a bouncing back or a strong recovery from a macroeconomic or macro magnitude point of view, but that there is a structural modernization and transformation of the Spanish economy ongoing, which has to do with the new green economy, which has to do with digitalization, and it has a lot to do with the European funds, Next Generation EU investment and reform program. We have front-loaded that investment and reform plan, and the results are already visible.
Have you had a chat with Elon Musk at all?
No.
Should you have a conversation with him? Because he's reportedly in talks to build an EV factory in Spain.
Yes, I mean, we hear regularly, I should say. We hear about a possible battery.
Have you tried to reach out and have that conversation?
Well, I personally don't have a relationship with him, or I haven't had a chance to talk to him. But I am sure that the President's office is in contact with anybody that's interested in investing in Spain. Due to, thanks to the low energy prices, high penetration of renewables, and the competitiveness of the Spanish economy, we're attracting unprecedented investments.
Asking for a friend, I was in Washington, and the Dutch finance minister could not get us tickets to Vermeer. The whole team wanted to go to Amsterdam and see the Vermeer. Can you get us tickets to the Prado here with the Picasso opening up? I mean, 50th anniversary of this giant of Spain with El Greco. We need tickets to the Prado. Can we?
I mean, Tom, anything you need.
There we go. There we go.
I have
Coming
a
up,
sweet spot
the last week of June from Madrid.
Vice President Calvino, Nadia, thank you. It's good to see you. It's
Thanks
fantastic
to you.
see you in New York.
Delighted to be here.
Thank you very much. Nadia Calvino there, the Vice President of Spain, with a lot on the table, a lot to sort out this summer, Tom.
This is, in America, this is an undertold story. And we know, I'll be honest, this all got jump-started by, of all people, Madonna, who started talking up Lisbon and Madrid as a place to be. And John, it is a boom emotion now in America. You go
Hang on a minute. You're saying Spain's known now because of Madonna.
No, the whole American investment thing to Portugal and to Spain came off one interview with Madonna.
What's Portugal got to do with this?
Two different nations.
No, it's people moving over there to the point where they've shut down some of the ability to buy real estate.
Oh, that's what you're talking about.
Yeah.
Like the golden visas to buy.
All of that. Madrid, and then you go down to Seville and.
I'm sure Madam Vice President can hook you up with a visa, Tom, if you'd like to purchase the property in Madrid.
We'll hear on the break.
Vinky Chadha at Deutsche Bank on the equity market coming up shortly. I'm sure we'll watch the football, we'll get season tickets. Oh, great.
Great. Tapas.
Probably pay less in taxes versus New York at the moment.
That's right.
You see how much money you can save just by moving to Miami?
You have excess savings dissipating by the end of the year. You have student debt payments coming back. And so we think it's a consumer that looks a lot weaker by the end of this year.
We're in a world with higher inflation, and we've reset.
One conviction view that we have is this higher for longer narrative globally.
I'm still optimistic that the market is going to move higher by the end of the year into next year.
Ultimately, if you do go into a recession, bad news is bad news.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on a Friday on radio, on television. We are resetting early for the mid-year look at June 30, resetting into an inflation report next week, into a Fed meeting next week, and resetting into a VIX, John, of 13.67, still a bull market unloved.
Binky, Charter at Deutsche Bank looking for more of the same, looking for 4,500 on the S&P 500. If robust earnings continue, capital return program should continue as well, and this equity market can grind higher, Tom, from here into year end.
It grinds higher, and the backdrop is interest rates, and there's a huge ambiguity here between three ideas. Interest rates stable, we're hearing that. Interest rates higher, we're hearing that. And there's a quiet group out there looking for substantial disinflation. I'd say they've had an off 10 days.
There are others who are looking for the long and variable lags to bite, and they've had an off 2023. They're sticking with it, though. They believe it's coming, and ultimately earnings are going to get hurt, Tom, later this year.
Tips percolating. I've had two guests this week talk about tips as being attractive. That inflation guesstimate, 1.54% on the 10-year tip, Lisa. And it's just out there. Is bond people seem to be hyper flexible now, trying to find the next trade.
And trying to understand where the distortions are at a time that people are betting on both immaculate disinflation, a tight Fed, and a sort of soft landing that delivers no pain. Something doesn't add up, right? Someone is wrong here. And so people are trying to arbitrage the places where there seems to be a little bit more consensus.
John, the confusion of the morning, you nailed us with Dan Ives and Tesla here. We got a Musk-Barra love fest.
Oh, big time.
Of a PE of 68 and 5. I can honestly say I've never said that.
Tesla up by more than 90%. Year to date. Tesla, one of the big winners of the year, along with the likes of Meta and what's happening elsewhere with NVIDIA. These five names now make up about a quarter of the index on the S&P 500. There's been tons of discussion about narrow leadership, and Lisa brought this up a few times this morning, and we need to keep on building on it, Lisa. Are we seeing signs so far this month that this rally is starting to broaden out into the Russell, into the small caps, into other parts of equities?
The answer seems to be we're seeing signs. The question is how durable they are, and you're absolutely correct to bring that up, because we are seeing the initial inklings that perhaps this is something sustainable. I keep going back to what Michael Purvis said, which is if you have fund managers that have gotten it wrong all year and they look at the headline number, which is distorted by this top-heavy AI trade, they're going to catch up with everything else, right? And so at what point does it bleed out by de facto?
Did we begin to see that this week?
Strip out the 7 on the S&P 500. Michael Hunt of Bank of America. The S&P this year's down. If you strip out the big 7, have we seen it this week? The Russell's up 7% this week. We've seen it this week. I don't know if we're going to see it next week and a week after that. Binky gets paid the big bucks to give us the answer to that one, Tom.
I'm gonna do a data quote here, John. I've got to do it in honor of Mr. Taleb. What a joy yesterday.
How was that?
It was spectacular.
I caught a bit, Tom. Well
we
done.
haven't seen each other in ages, and Nassim was heated. And of course, on Bitcoin at 26,000, he was scathing. There's no other way to put it. It's been a big, we haven't talked about it this week, but a big shift by Gary Gensler. What's the data look like, John?
Equities just about turning positive almost for a moment in time, now unchanged and slightly negative on the S&P 500. Yields a little bit higher by 3 basis points, 375. I think we'd all like a quiet session going into the weekend, Tom, and come out the other side and focus on CPI and the Federal Reserve after that.
At Deutsche Bank, for David Folkerts-Landau, setting the intellectual structure on equities and asset allocation, Chief Global Strategist Binkem Chadha joins us this morning with DB. Binky, you nailed the bull market. It took a while to happen. The Chadha market, the Chadha bull market took a while to happen. And with a vengeance, you nailed this. And when we were talking, going live here, you made clear 10% of the people have participated and 90% of the people have been left behind. What's the next leg look like for 90% of the people that have missed this October market?
Yeah, so, I mean, for them, you know, and the distinction that I was drawing was we've had a move up in equity positioning. So we have a simple sort of Z-score +/-1 band. And, we were at the bottom last year. That was the reason for the call for a positioning squeeze. Positioning today is sitting in the middle of the band. The entire move in positioning up has come really from systematic strategies, as vol has come down from extremely elevated levels to still very elevated levels outside, I would say, especially driven by really rates vol. Discretionary investors, which, in terms of assets under management, are, I would say, 8-1 in terms of relative size to systematic strategies. Their positioning has been what I would describe as firmly underweight for the last year in, a very narrow range.
Can I translate? Firmly underweight is polite shot attack for long.
So the participation has been, minimal to zero to non-existent.
Be nice,
this week, what we are seeing is basically some move up in what we put in our positioning measures, but it's really a sentiment indicator, and that's the AAII bull-bear spread, and that's moved up for the first time. Whether or not that actually translates into increased allocations, we have to wait and see.
The call from here, from where we are at about 4,300 out to 45, just reading your research last night from the last week or so, it feels like it's all about earnings. Can you pair this view about earnings with what's happening on the other side of the research team with Matt Lazzetti and Deutsche Bank ultimately looking for a recession? Can you pair the two views at the moment, Binky?
Oh, absolutely. So that's really easy because they are the same view. The view. So my earnings numbers tee off of our house economics forecast, but with a small twist, I would say. Remember that the S&P 500 gets 30 to 40% of its earnings from the rest of the world. So I have, a sales-weighted global GDP measure. Obviously, for U.S. equities, the U.S. economy matters a lot. We have a framework. I'm going to leave that aside for a second as to exactly what it is, but it tees off of basically our house economics forecast. So it's really a translation issue, if you want. It embodies a recession in Q4 and Q1. The things to note about it are that the forecast is for a pretty mild recession. Number two, we do have growth happening until then, and that means that the recession kicks in from a higher level in terms of earnings. And what I would emphasize is that the equity market, when it looks at aggregate earnings, like the S&P 500's earnings, tends to look year on year. And year on year, we are still negative in terms of growth. It's slightly less negative than the prior quarter, but it's still negative. But remember that when we look at all macro series, we look quarter on quarter, which in equities we call sequential growth. And our estimate of sequential growth in S&P 500 earnings in Q1 on a seasonally adjusted basis is a solid 5%. And I would emphasize that's not annualized.
Markets are not the economy. And you have to just keep repeating that. Markets are not the economy. So John was mentioning that earlier. And I am wondering whether this could be the start of a bull market, even though the U.S. has not yet had a full-blown recession.
Yeah, so there's two sort of elements about the recession that I would emphasize. This is arguably the most well-telegraphed recession. Recessions, in my view, in terms of their impact on financial markets, are not really about a couple of quarters of negative growth where everybody agrees that it's modest and temporary, because the market's going to look through that. The market's meant to look through that. If you listen to corporates on earnings calls, we're at the point where we've been talking about recessions for at least the impending recession, basically, for at least 3 quarters. And so, corporates are, already responding. And the idea I would put on the table is that, it's very possible that the recession slowdown, part of that has already, been brought forward, if you want. If a recession is very well anticipated, it's not very, there's little shock value to make you risk averse. So there will be some negative impacts, but a lot of the multipliers come really from risk aversion, and it's the concept of anticipated risk aversion. An anticipated shock is not a shock.
Just to tie this all together and to end where we began, do you think that we are seeing durable signs of a broadening out?
I think that it gets pretty choppy from here because the positioning squeeze that I spoke about at the beginning, that's mostly basically been done. I mean, as as Tom mentioned, VIX at 14 and 13, the biggest driver of systematic strategies is decline in vol, and we are not looking for, vol to really go down from here. We are not really looking for discretionary investors to raise their positioning because, as you said earlier, there's this very long list of concerns that they're focused in on. And I don't think the resolution of those is easy. So we're going to continue to have a tug of war. But the demand supply, the positioning squeeze is done, but the demand supply balance still looks, constructive. So I would say a grind higher, 4,500 by year end. But it should be pretty choppy.
Extrapolate out.
Soft landing will easily give you 5,000. Yeah. We've said that before. We've published that before.
Binky's so measured. Binky had a tough year last year, same tone. Great year this year, same tone.
He had a tough year last year because you make the call, but the x-axis you never know.
So the life of a strategist, Binky, just quickly.
Yeah.
Does it feel a whole lot better when things are going right, or do you get nervous that things are about to go wrong? Are you constantly paranoid? How do you think about it?
I'm constantly paranoid.
What is it like?
You're asking me this on air.
What's your approach to that? Last year was tough. I've talked about that with you many times. This year is better. How do you approach things when you're right?
The same way as you approach them when you're wrong. You ask yourself, what have you got right? And I mean, are you right for the right reason? And what have you got wrong? And you adjust your view accordingly.
What was the lesson from last year that helped you with this year?
The lesson from last year was a confirmation of my view early in the year that we would get a massive amount of anxiety from the Fed, but the anxiety was of their own creation because they decided for a variety of reasons to wait a long time. So when I listen to the FOMC now, I hear calm. I mean, and that reaffirms my view that a lot of their nervousness, yes, about inflation, still about inflation, but they were at 0 to start the year. We're now at 5, and so there's a lot less reason to be anxious.
Excuse to get out of the triple leveraged all cash fund. I mean, first order, 100 shares of NVIDIA.
Hey, Binky, this was great. Yeah. Tons of respect for you. It's always great to catch up. Binky Chowdhury there of Deutsche Bank. Coming up on the Open, Mohammed Al-Arian. On the Fed next week, Daryl Cronk, Wells Fargo, Michael Cushman, Morgan Stanley on this market, Sarah Hunt of Alpine Saxon Woods. All coming up in the next hour on Bloomberg TV.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Relief is in sight. The National Weather Service says heavy rainfall in parts of the eastern U.S. on Sunday should help dissipate much of the smoke choking the region as a result of the Canadian wildfires. Air quality is already showing some signs of improvement, with the level in New York City returning to moderate overnight. Still, conditions remain unhealthy for many cities, spanning from North Carolina to Rhode Island. Donald Trump has become the first former U.S. president to be charged with committing federal crimes. A grand jury has indicted Trump in connection with his refusal to return classified documents found at his Florida home. If convicted, he could face prison or be disqualified from holding public office, including seeking to recapture the White House in 2024. Most economists expect the Federal Reserve to pause interest rate increases next week for the first time in 15 months and leave policy on hold through December. According to economists surveyed by Bloomberg, the Federal Open Market Committee will keep rates steady at its meeting at the 5 to 5.25% rate. Officials face a closer call on what to do in July. I'm Lisa Mateo, and this is Bloomberg.
Mr. President, what do you say to Americans to convince them that they should trust the independence and fairness of the Justice Department when your predecessor, Donald Trump, repeatedly attacks it?
Because you notice, I have never once, not one single time, suggested to the Justice Department what they should do or not do relative to bringing a charge or not bringing a charge. I'm honest.
And that will be replayed in the coming months, and particularly the Tuesday of next week, when we are supposed to have a summoning of former President Trump to a federal court in Miami. Tom Keene and Lisa Abramowicz with us. We've talked a lot this morning about this news that occurred last night, the appearance by President Trump as well. We're going to digress from that right now because this is important. There's times where you stand at Bloomberg and two people are talking and you go, well, this I really need to listen to. Amory Horton yesterday in conversation with a gentleman out of New Trier in Chicago, Auburn, NROTC, shockingly competent with the United States Navy in our intelligence efforts abroad. And Amory, I want to focus with your conversation with Admiral Rogers on the Pacific Rim. I was spellbound by the acuity of the discussion. Tell us about it.
Well, I think what was so interesting speaking with Admiral Rogers is because this is an individual who has nearly 40 years experience at the Navy. And when you talk about and just see headlines about, say, a U.S. warship in the Taiwan Strait coming very close to a Chinese vessel, you potentially think, how does this happen? How does this work? And he actually can explain to you because how ships move so slow. The distance between that obviously had to be a provocation. He's able to take these moments we are seeing in time and extrapolate them and explain why it matters so much at this moment to a business community. And I think really for him, what he sees in the national security apparatus is it's no more just about hardware and the military, that you actually need individuals with top-notch economic minds when you're trying to deal with the geopolitical issues of today, not just China, but also what we're seeing in Russia.
What about the geopolitical issues of the Beltway and Washington? I mean, we're not asking the Pentagon to solve the firestorms of Quebec, but is the Pentagon, within your reporting, feel like they're on their own because of the gridlock and the political debate to the election in Washington?
I don't know if I would say they're on their own. I think the Pentagon has always tried to take a above politics approach. Obviously, they're in the news very much this week, last week, because of all the talk around Congress and the White House regarding the debt ceiling drama in that bill about caps on where you want to have defense spending. And that's going to be a huge story going into the end of the year because to get that bill over the Senate, you had defense hawks basically being promised they're going to have supplemental bills to make sure they can get more money to the Pentagon, and McCarthy saying that might not
Lisa,
fly.
that's Anne-Marie Horton talk. And the answer is Admiral Rogers was talking yesterday and you felt like you were on one of those two boats.
Yeah.
In the Taiwan Straits. I mean, it was stunning to get away from the Beltway blather to somebody who actually knows what they're talking about.
War is cold and soft. All others are won by logistics, not by anything else. It is about the actual tangibles of the experience. And I do wonder, this is where everyone's focus actually is on, even in the investment world. I was speaking to someone yesterday who was saying it isn't the Fed, it isn't these sort of economic figures, it's geopolitics, and it's what we track forward. How concerned was the Admiral about what is transpiring, how we are sort of shaping up right now?
Well, me and the Admiral joked, and Tom was there. He heard it. It was quite a depressing conversation if you're looking at all the geopolitical risks that are emanating around the world right now. Obviously, there's Russia, invasion of Ukraine. Where does this lie? What does the future of this look like? He brought up the fact that maybe this becomes a frozen conflict. I think more people are starting to feel that that potentially is going to be the end of this. It just doesn't end, but it doesn't become a hot war.
We call that World War I. Continue.
Let's hope not.
and then obviously China. And this for the business community is paramount, right? Because the economies of these two countries are so ingrained. The trade is at all-time records. They have tons of investment in China. And really what so many strategists and individuals that look at geopolitics and implications for the economy are trying to learn about the lessons from Russia and what that could mean for China.
We're talking about this, and it sort of is a digression from the news of the day in terms of the potential Trump indictment, according to sources that we have not yet seen the full documents of, and what that means for the whole Republican election. I am wondering, though, how that does dovetail into the U.S. perspective internationally. How much of the theater in the U.S. actually does have a material difference to what the rest of the world does with its dealings?
Well, listen, the rest of the world, and I've spoken to a number of individuals abroad, they are so focused on 2024. They have individuals in the United States, even traveling the country, trying to figure out what the U.S. will look like come November in 2024. Who will be the next president of the United States? Is it another President Biden? Is it another President Trump, or is it someone else? And this is incredibly important for Western allies. It's incredibly important to the decisions they make now in terms of how they are going along with the U.S. when it comes to things like China. And then for adversaries, they want to know, say you're Putin, will you want to know whether or not the Ukraine aid will continue at the level it has, or is that going to be pared down?
In the zeitgeist in the last 3 days, and I'm sorry, folks, I can't cite it. I don't have it in front of me, but I'm clear that I saw some form of article, mini article, that the White House is out talking to cabinet officers about what's your plan. Should we expect announcements over the week in Axios over the weekend into next week? Are we going to see ya from cabinet officers?
I don't think this is anything we're going to see immediate. What you see from the chief of staff, Mr. Zients, is that he doesn't want to deal with headaches at the moment when they're going into an election campaign. Because remember, if you're a cabinet posting, you need to go through the Senate. And these could be long, drawn-out processes, and they want to remain focused. So I think his message was, if you do not plan on staying till the end, give us the courtesy and be gracious and leave sooner rather than later. Stan
Druckenmiller said to Shonali Bassick at Bloomberg Invest that he's rooting for the governor of Rhode Island. Is the Secretary of Commerce, Ms. Raimondo, is she a potential candidate?
I think
of some form?
When you look at how Secretary Raimondo conducts herself and her CV alone, this is just based on looking at her and talking to people who really do like her. She has great respect within the business community. She is someone that they pick up the phone and call. She was a governor. She's now a cabinet post. I think you can look at her and say, this is an individual who has higher political aspirations.
What's going to be the Sunday talk show discussion around Trump?
Trump. That's it. It's going to be all Trump. Whether if we get the indictment,
Red Sox, Yankees into it.
Yeah, let's hope. Let's hope it's that the Yankees are beating the Red Sox. But I think on Sunday, it really depends if we do get the indictment text today, right? And that.
We could get it today?
Yes.
I did not know that. Okay.
Yeah.
That would be interesting. Fascinating. Emery Horton, thank you so much. And again, congratulations on just a riveting discussion, folks, with Admiral Rogers, Navy retired, here on what we're doing in the Pacific Rim. Lisa, we got to go through the data, which tells you it's, to borrow from Greenspan, somnolent, oil at 71, West Texas Intermediate. DXY doesn't give you much love. But I just go back to the VIX under 14, and that colors every conversation. This bull market that's slipped up on a lot of people, as Binky said, or not in the bull market.
The somnolent rally to a bull market, right? I mean, that seems to be what we've been doing, although it has not been somnolent in the tech shares, in the AI-related shares, and that seems to be what's driving everything.
Well, I mean, it's there, but there's been maybe a bit of rotation. It sets us up for an interesting June and really gets us to that key data point. I believe it's June 13th, the inflation report.
Yeah, which, again, let's see how much that actually changes the game, because right now we're looking at people who are basically pricing out rate cuts. It doesn't seem to really matter for equity valuations that are driven by this hype and this belief in American dynamism and what we're going to see with the AI developments.
We'll have to see, and I'm also going to point out we've been very quiet on housing, which has had a respite from 7.15% down to 7.05%. 30-year mortgage, maybe we'll get that to move up higher. This conversation will continue, and coming up with Citigroup, he has been dead on about higher interest rates. Hollenhorst of Citigroup. Stay with us on radio and television. Good morning. Bloomberg Surveillance, good morning. Again, an inflation report. We'll see that next Tuesday as well. We're adapting on a Friday to not being in the market. Triple leveraged all cash fund. Missed that puppy, didn't I? Red and green on the screen, the VIX 13.65. And because of the importance of this conversation, you know what? We're going to truncate the data check. And Lisa's got intelligent words from the guy at Citigroup who was so right.
Well, this has been really the big debate. Everyone sort of priced out the idea of further Fed tightening after what happened in March, and he stuck with it. He said that the economy was still strong, and here he comes today, Andrew Hollenhorst and the team over at Citi, still maintaining their call that next week is not off the table. The Fed is going to raise 25 basis points, writing, quote, "The Fed remains on track to revise up GDP and core PCE inflation projections and lower their forecast for the unemployment rate. Dots for 2023 will need to move higher prepared to avoid communicating that policy is unresponsive to data. In our base case, the Fed will hike 25 basis points and raise the 2023 median dot by at least 25 basis points. How do they do this, Tom, without surprising the market, which is something that they don't want to do in a disruptive way?
Or how the market adjusts as well. Let's dovetail the finance and the investment part of this into the economics of Andrew Hollenhorst, chief U.S. economist at Citigroup. If we get a Hollenhorst call here and you've been shockingly dead on, what does the 10-year yield do? Should amateurs just assume the 10-year migrates up to a Hollenhorst level, dare I say, 4.5%, even 5%?
Well, I think you're zeroing in on exactly the issue for the Fed is they keep pushing higher with policy rates, but it's very hard to get traction on the 10-year yield. It's not clear at all that the 10-year yield would move significantly higher, because the more the Fed raises policy rates, the more the market is going to price that the U.S. economy will go into recession, that inflation will come down, and that the Fed will be cutting rates. So the Fed really has to communicate both that they plan to continue raising rates and then they plan to continue to hold them there. They're trying to communicate that, but that's not coming through to the market.
So this is critical, and I go to Anna Wong's wonderful work on Chicago with Bloomberg. Her brilliant call dovetailed with you and, frankly, Dudley of the New York Fed, now writing for Bloomberg Opinion, which is all of a sudden the time continuum matters. It's not about going from this level to that level. How have you adjusted the longer at a given rate?
Yeah, so I think that's really the margin that we might see the Fed trying to play with more now, because it is the case that policy rates are getting to levels that are close to restrictive. A lot of last year was about getting to that restrictive level. We're probably not quite there yet, but there's a sense that we're getting close. So now the Fed is in a much more difficult scenario, I think, because they have to guide to keeping rates higher. They can do it with the dots. That's what Lisa was mentioning, that the 2023 dot can come higher. I'm not sure that they're going to do it at this meeting. A way to strongly guide that you're going to leave rates higher for longer is to raise that 2024 dot to indicate that in 2024 you would actually be leaving rates higher for longer. I'm not sure they're there yet.
Abramo Cam's over here. She's laughing at me.
Well, I mean,
she knows how much I disagree.
Well, no, instead of talking about the dots, the signaling between moving this one up and that one up, why not just raise by 25 basis points? And that seems to be your view. That sends a pretty strong message. And yet that would go against historical precedent for this Federal Reserve that is not looking to surprise markets and has signaled every which way they're going to pause.
So look, to your point, the simplest way for the Fed to indicate a hawkish or dovish bias is to do something. And that's always been the case. That continues to be the case. Raising 25 basis points next week would be a very clear way to send that message. It's not that big of a surprise for markets if they were to, for instance, raise 25 basis points in June and signal maybe they would skip July. Well, we have about 20 basis points priced for those two meetings. So maybe it wouldn't be a huge surprise in that respect. Remember, we also have a CPI reading upcoming. But I think you're focusing on exactly the right thing, that it's very hard to get markets and the public to buy your guidance for what you're going to be doing sometime in 2024, because there's so much uncertainty. What you can do is to do something today, to do something next week. That would be a strong way to send a hawkish signal.
One of the biggest divergences right now among the people who we speak to is what they believe inflation is doing, whether they do believe it's stickier, whether there's going to be this sort of disinflationary kind of trajectory that we've been hearing about from a number of different shops. I'm just wondering how you view the market's reaction if the Fed does not hike rates next Wednesday. Will you see a bleed up in yields in the long end, a sort of unmooring of inflation expectations?
I think you could. I don't know that next week is going to be the pivotal moment when markets kind of realize that maybe inflation is going to stay persistent for longer and the Fed's policy isn't going to be as effective as has been priced in. But you go back to just the basics of how they're going to adjust the forecast, like you were talking about, with GDP growth coming up, with core PCE inflation being revised up to some extent. Just raising the dot for 2023 25 basis points, if you're revising up inflation 20 basis points, that's just kind of staying even with where you were. If you don't do that, it's actually dovish.
I'd love you to comment on what we were talking about with Kathy Jones from Charles Schwab about this idea. What does it tell us that the economy has been so resilient, even though the Fed has raised by 500 basis points? Does it tell us that the long and variable lags, as John said, are longer and possibly more variable? Or does it tell us that this is an economy with way more momentum than anyone had ever imagined?
Yeah, I think the issue for the Fed and the issue for all of us analyzing this is that probably both of those are true to some extent. So you've seen in the housing market, we've already had the maximum power of tightening, where we got mortgage rates higher, we got housing activity that slowed down. But now it's bottom. Now it's coming off that bottom. Now house prices are coming up again. So in that sense, it's not a lag issue. It's just that the power that was in the economy was too great to be overcome by 500 basis points of rate rise. But then you also have a lag issue. And I think if you think about what's happening with the banks, for instance, we do expect some drag from that tightening. But that's going to play out with a much longer lag. And that's, going back to March, I think some people were looking for an acute tightening of credit conditions. That didn't happen. We didn't have the acute credit crunch. That doesn't mean that we're not going to have more restraint on bank lending, but that can take a year or longer to really flow through to the economy.
Michael Woodford, Interest in Prices. You're the only one I know who's ever read the book. It's 948 pages, and everything there is about convergence, about this. Right now, getting to Tuesday, core CPI with 3 exponential moving averages is converging to 0.4%. That's a lot of math talk where we've really reached a stasis on inflation. What could that signal for you Tuesday if we break out of that convergence?
So I think that's what we're all looking for on that Tuesday. Does core CPI inflation come in 0.4%? That's about what the market is expecting. That's still well above the 2% target, though. That's close to 5% annualized rate of inflation. So 0.4%. I think we still price some probability that the Fed hikes. Maybe they do. Our base case is that they do. If you surprise to the upside, though, if we surprise to the upside and we get a 0.5% reading, and even if that's because it's used car prices that went up more than expected, I think just optically it becomes very hard for the Fed not to hike.
What about the other way? We go the way of Ed Hyman and David Rosenberg. They don't agree with Andrew Hollenhorst. If we break to 0.3%?
0.3%, and there you could have a
I've
Fed.
never had this conversation. This is how stupid this conversation is.
It is where we are. It is where we are. 0.3%, and the Fed may point to that. They may point to the rise in the unemployment rate, right? And that we're really kind of, picking and choosing our data here and say, you know what, we're going to skip in June, but we're probably going to be hiking in July. Now, I think that's a lot harder to communicate.
This is
but
ridiculous.
They can pick and choose and do that.
It was so much more intelligent. Greenspan's carrying a ham and cheese sandwich. What's it mean?
That was that more intelligent.
Yeah.
The problem here is we don't understand the parameters. I keep going back to that. We don't know what economy we're going back to. We still are dealing with pre-pandemic or really post-pandemic distortions that are creating long and variable lags with respect to the stimulus as well as with respect to the Fed tightening. Do you have a reset expectation of the parameters we're going to settle out in? Will it be a higher inflation environment with perhaps higher interest rates for a longer period of time, or are we going to rapidly disinflate at some point far out there?
I think the risks are that we end up in a more inflationary economy. And you heard Bank of Canada officials talking about that yesterday, this idea that inflation just structurally can be stronger now. And we're seeing some of those indications already. Some of this is geopolitical. Some of this is just the fact that we now have a more supply-constrained economy, and we're really not used to that. For many, many years, we had an economy where there was plenty of supply, and the issue is demand. Now we have these more real supply shocks, and that's going to be a more inflationary world.
Are higher rates stimulative on the edges? Basically, that people can actually earn something from their money, and then also you're getting, just nominal growth in revenues that will help foster some of the dynamism and won't necessarily create this relationship that everyone thought yields up price of everything, risk down.
Yeah, it's a great point. I mean, there are winners and losers when interest rates move higher. There are distributional consequences. You're moving income around within the economy. But the net effect is still a tightening. I think the net effect of higher rates, even though savers will do better, borrowers, it will be more difficult, the net effect is going to be a tightening.
From where you sit, and we've had a glorious week here talking equities, including Citigroup equity as well, how do you link your economics to your equities strategists? I mean, I know you guys don't talk, you hate each other and all that, but how do you link your world to the stock market world?
So, I mean, we talk regularly, and
Greenspan made a big deal about this.
Yeah, we talk about whether you can reconcile what's priced in fixed income markets, what's priced in equity markets, and what the outlook for the economy is. And I think the way you can best reconcile the three is to have an outlook for some kind of a soft landing. And unfortunately, that's not my outlook. That's not most people's outlook. But it is hard to see how you're going to sustain very low levels of equity, implied volatility, high levels of equity prices, and have a Fed that is fighting inflation that remains persistently too high.
I mean, the inflation call that you've had is brilliant. And to Lisa's point, at some point, it breaks out there. What will be how does the Fed, we've never been here before. The Fed has raised rates as we've never seen. We've never had an analog where they have to cut rates after that kind of first derivative move. We've never seen this.
Yeah, and it goes back to what we were talking about before, that Fed officials, I think, will be quite reluctant to cut rates. It doesn't mean that they won't. Once you see clear evidence that the labor market is loosening, that inflation is really on a downward trajectory.
What's your unemployment rate to make that point happen?
I think they certainly need to be above 4 and probably above 4.5%. If you look at their own projections would have had unemployment at 4.5% at the end of this year, and they still would have been holding rates.
So what's that on a non-farm payrolls basis? Do you have to have negative non-farm payrolls?
You need to have negative non-farm payrolls. 339,000 new jobs is not going to do it.
That's a Hollenhorst statistic, the way down. Congratulations on just an extraordinary and persistent call here of what this Fed has done. Mr. Hollenhorst is with Citigroup. Red and green is, Lisa, there's a lift to the market. Hollenhorst driving the market higher.
I don't know if I would really characterize it as that, basically saying the Fed will be more hawkish. But yeah, there definitely is. The melt up, the melter of all melt ups, as Ed Yardeni said.
Coming up, lean forward, Jeffrey Curry, Goldman Sachs, on oil.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Relief is finally in sight. The National Weather Service says heavy rainfall in parts of the eastern U.S. on Sunday should help dissipate much of the smoke choking the region as a result of those Canadian wildfires. Now, air quality is already showing some signs of improvement, with the level in New York City returning to moderate overnight. Still, conditions remain unhealthy for many cities, spanning from North Carolina to Rhode Island. Tesla shares are poised to rise for a record 11th consecutive session, matching the stock's longest winning streak set in January 2021. That after General Motors said it would adapt its electric vehicles to Tesla's superchargers. It follows a similar move from Ford. Tesla shares have risen more than 90% so far this year. Former Barclays CEO Jess Staley has been out of sight for more than a year and a half as the revelations about his relationship with disgraced financier Jeffrey Epstein piled up. But in New York this weekend, Staley is scheduled to give his version of events for the first time. A pair of lawsuits allege he witnessed an assault on a young woman and may even have participated in a sex trafficking ring run by Epstein. Staley's lawyers deny those allegations. OD Asset Management is in talks with some of the world's largest investment banks, hoping to convince them to stick with the London firm. Now, several began distancing themselves from OD after new allegations of sexual assault surfaced against hedge fund manager Crispin Odey. Morgan Stanley is cutting ties, while JP Morgan and Goldman Sachs are said to be reviewing their links with the company. OD CEO Peter Martin says the firm's lawyers are looking into the claims. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
I've been a critic of Bitcoin. It's a fad. I mean, the claims they make that they're a refuge are false, that they're good for transaction is false. They're not even attracting the bad guys anymore. And you know that the Federal Reserve can very quickly replace these cryptos.
My first project with Bloomberg, even before I wandered into the building, was with a guy named Dylan Radigan, long ago and far away. Dylan Radigan called me up and said, we've got this guy who's a quant guy, and he's got a book out. Is this going to be a big or a small deal? And I think they had to move the venue 4 times because 1,200 people showed up for Nassim Taleb. I will tell you what I finished yesterday at Bloomberg Invest. Here's where you start. Fooled by randomness is what started it for Nassim Taleb. There is no one I know in our universe who has published so consistently and so excellent and there with his heated opinions on Bitcoin. Jeffrey Curry's going to come out with his version of Fooled by Randomness on oil, global head of commodity at research at Goldman Sachs. Jeff Curry, I say this with immense respect for your bulletproof University of Chicago microeconomics and econometrics. How did oil fool you by its randomness in the last 12 months?
Well, I have to say, we have never been this wrong for this long without seeing evidence to change our views. Obviously, some of the upside has been taken away by recent events with, the sanctioned oil surprising to the upside, whether it's Iran, Russia, Venezuela, and more destocking. But the core thesis still very much remains intact. And I think one of the big drivers is, you've lost 250 million barrels of paper length in this market. We're back to where the market is as short as it was during COVID when we saw negative prices, and you've erased the overall length going back into the early 2000s. And I chalk this up to, ultimately a broad, what we call the great destocking. High interest rates are forcing destocking of physical barrels, destocking of sanctioned barrels, destocking of SPRs, destocking of finished goods, even destocking of financial paper barrels. So we have been just continuously selling for about 6 months to 9 months now.
Can you elaborate a little bit? Because for people who are not in the nitty gritty, a lot of what you said was perhaps a bit opaque. The connection of high interest rates to a lack of interest in buying oil on a whole range of areas, or a lack of sort of stockpiling physical or paper crude.
Let's go through the economics. Let's say to borrow money today to buy a barrel of oil, because you got to, finance your physical inventory. Let's say it's 7-8%, somewhere like that. LIBOR is paying you 5.25%. That's your opportunity cost of putting your money into a risk-free investment. So your net cost of holding physical inventory runs somewhere around 13, potentially even 15% in this environment. Why are you going to do that? You've got NVIDIA and NASDAQ going up. There's so many better places to put your money. And I think the other point too, oil, copper, and the rest of these markets don't have a positive carry. So they cost you to own it, cost you to store it. You're going to drain down these inventories as much as you can. So oil, copper, they are a liability right now. They are not an asset. And until they become an asset, no one's going to want to hold them in an inventory or hold them in a paper form. And so you could just think about that the cost of holding these commodities has risen so much that ultimately you're destocking. Now, we've been waiting nearly a decade for the Iranian floating storage to discharge. It's finally discharging right now, which tells you nobody really wants to hold this commodity. We think that's going to change, and I think it has to start with lower inventories, forcing what we call a backwardation, which is a positive carry in the curve. Then somebody will want to own it.
This is fascinating because for years, people were decrying the financialization of crude as sort of a bet on the macro economy. Are you saying that it is no longer in the same kind of way, that this is basically where it is traded, but it's actually a liability now that the financialization has come to such a place where people look at it as comparable to an interest-bearing type of instrument, and you're waiting for some sort of, not I want to say crisis, but a complete lack of inventory to spur prices in such an extreme way that you get a violent shift up that really forces the hand of people who are left kind of in the dust?
I'm not going to say it's 100% interest rates. It's fear of recession, why people don't want to own these. The government discharged their reserves due over fears of inflation. So there's other factors at play here, but I think your broader point is absolutely right. We think about, when was oil financialized? In the 2000s, when interest rates, it was right after September 11th in 2001, when interest rates first went to near zero. That's when you started to see the explosion in the financialization of oil and commodities. And we stayed into this, this loose money environment for nearly 15, 20 years. And now money costs something.
There are a set of world-class leaders, and you're one of them, Jeff Curry, on this, and with the acuity of the, what I'm going to call almost the general equilibrium theory of hydrocarbons. You parachute into Riyadh right now, and you have to advise the Saudis on the elasticities of supply and demand around this new world, which is the old world of a cost of money. How do you advise Saudi Arabia in this new world of higher nominal and real interest rates?
Their market power has never been higher. And one of the reasons why is you combine the higher cost of money combined with issues around the cost of funding hydrocarbon type of investments. They're the only game in town. They have no competition right now. When we look at the cut they made in October, that was the very first preemptive cut we've ever seen OPEC do. And we just saw 2 more cuts announced in the last, the last 3 months. Mm-hmm. Why? Because they don't have fear of competition. Yes, the oil that's coming on market is Russian, Iranian, and Venezuelan sanctioned oil, and eventually you'll run out of it and there's nothing behind it. But is there competition from the rest of the world? The answer is really no.
Is the United States not ignorant but unaware of the international dynamics of oil, of moving oil up to Japan across the Pacific Rim, and all the dynamics of the Middle East? Have we gotten lazy?
I think there's a bigger focus on immediate term issues, things like inflation fighting, which is why we saw such a sharp rundown in the SPR. And you put all the SPRs together, it was 250 million barrels drawn down. That is a lot of oil. So I think the focus from a policy perspective is get the inflation down and keep it down. But here's a fact I like to throw out. You look at core CPI, it's somewhere around 5.5. It was at that level, going back nearly 2 years ago. Yeah. What's changed is oil prices went down, taking headline from 9 down to 4.5.
Just quickly, Jeff, do you think that that's the reason why the U.S. is not refilling the SPR more aggressively, because they're still concerned about inflation and that could, on the margins, push prices up?
Well, I think with, the showdown over the debt ceiling, getting money to go buy oil would be really difficult to come by. But that aside, listen to France, listen to Germany. The focus now is building strategic reserves of green metals, like battery metals, like copper, lithium, cobalt. So if you're going to build strategic reserves, you're probably going to do it in, the green economy commodities, not in the old economy commodities.
Jeff, where's oil in a year? I know it's an unfair question given all the ambiguities out there right now, but I've got to ask. I mean, we're down, right, wrong, whatever. Scope out where we are in 12 months.
Yeah, our view is you're going to see substantial physical inventory draws because of these OPEC production cuts, particularly during third quarter as well as in fourth quarter. That's going to push us up into the low 90s. Now, the question is, will you bring the investor back into this market? And by the way, I put a question mark on it because it'll have to be a new class of investor. It take that investor buying to push you back up towards 100. We're not, I know a lot of them have gone left and it'll be difficult to get them back. But I think the key question, fundamentally, we can get this market higher. And I think if we get, once you turn oil into an asset, you'll attract capital back to it. But I don't think it's going to be the same cast of characters.
Jeffrey Curry, thank you so much. Just absolutely brilliant there with Goldman Sachs. And Lisa, this really rolls over to Shonali Baskett's conversation yesterday with Mr. Waldron of Goldman Sachs. They're both talking about what you've talked about so much. Guess what? The world's changed. There's now an interest rate. It affects equities, bonds, currencies, commodities, and West Street downtown.
It was just fascinating. I really want to spend some time thinking about what he just said, the financialization going into reverse of the crude market.
In the next hour, Mohammed El-Arian is on. He's not with Bloomberg Surveillance. He's with another show. Stay with us on radio, on television. Good morning.